I've been oscillating, oscillators, honest in my oscillations, occupying options, operating observations, talking profit conversations, copping off consolidation, calculating candles, contemplating correlations. Broke a trend line, bend time, stress test a baseline. Every verse a back test, bless that trace. Mine I'm volatile, vocal vote, bullish on pain. Every loss I took, just retrace my gain. Syllable sync with the tick of the tape. I'm liquid in spirit, encrypted in shape. You passive in funds, I'm aggressive in fate. Turned out to a derivative, hedging my state. I'm the algorithm and the blues. Turn my trauma into moves. Every tick another groove. I make chaos keep its tune. I make chaos keep its tune. I make chaos keep. I've been gamma with grammar, glamour and grief. Grammar hammer like slammer relief. Candles flash like panic belief, but I rhyme like I'm hedging my chief motif. I'm the product of paradox, panic, and peace. Every metric I measure got madness beneath. Man, I manifest margins from nothing but nerd. Risk reward ratio perfectly good. I'm this audible profit. All of my problems I pocket and stock it. Algorithmic, I'm highly melodic. Talking that logic, but louder than rockets. Pattern and patterns, I'm fractal fanatic. Mathematics and magic and habits schematic. Crash like corrections, but bounce cinematic. I balance my baggage with habits emphatic. Algorithm in the blues. Turn my trauma into moves. Every tick another groove. I make chaos keep its stronger. Algorithm blues. Turn my trauma into moves. Every tick another groove. I make chaos keep its tune. I make chaos keep its tune.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where we are starting it a wee bit early today because in a mere 6-ish minutes, we will be getting the first jobs report in a hot minute. Obviously, ever since the government's been shut down from early October to mid-November, we weren't getting any of the data from BLS. And then even as recently as yesterday, it was going back and forth of, are we going to get the data? Are we not going to get the data? Are we going to get the data? Are we not going to get the data? Well, as of early this morning, it was reported that we are in fact going to be getting some data, and it should be coming out at 8:30. So that's why I wanted to get rocking today. And in all reality, it kind of had everything prepped up, so I figured, hey, this is going to be the first time in a minute that we all get to enjoy our boy Ricks and Tilly together. And obviously, we have some extra things to talk about of Nvidia's earnings. The market's looking pretty good. Key levels to know: the market went up, we went down. Nvidia, the overall market, maybe a little bit getting saved right now. So I kind of want to spend a little extra time going over that nitty gritty detail of like, okay, like what does this actually mean? Who's going to get saved? Who's not going to get saved? That type of a thing, the key levels, the options, because we talked a little bit about Vanna rallies yesterday. So we might get into a more, I guess, nerdy math discussion of what that is, what that isn't, because right now the market as of close yesterday had a lot of puts in it. So we might be seeing those get unwound today. So I want to talk a little bit about that. We can get into the specifics of Nvidia earnings. Apex is finally back online. So for those of you who want those accounts, well, finally, you might actually be able to get them. So there's just a lot of moving parts. There's a lot of things going down. So I figured if there were a good day to spend a little bit of extra time hanging out with you guys, the Goonie trading community, it would in fact be today. So grab your coffee, do whatever you need to, whether you're bringing your kids to school, playing hooky from work, or whatever it is. Let's get rocking on the day. I should probably show you kind of where we're at. I don't even know if I have all the right screens open. Let's see how this is currently looking on the day. Right here, Stock futures rally as Nvidia's strong forecast reignites the AI trade. So right now in pre-market trading, the SPY, after gaining 0.4% yesterday, is up another 1.2. The Nasdaq, after gaining 0.6% yesterday, is up another 1.6. Actually, we closed at 599 and we're at 609, so it's up 10 bucks. Bitcoin chilling at 91, not really cracking that 90 level. And then obviously the one that is pretty much the star of the show is Nvidia. Closed at 186, currently at 196. Up 5%. And obviously the major watch is that post-market high around 198, 199, but obviously a lot of people paying attention to 200. So right now, we're seeing some bullishness across the board. I like it. We got this big pump late last night. So really what I'm looking at is the 10-minute and the 30-minute. The 5 minutes chopping around bullish, bearish, bullish, bearish. I would love for that to hold. Watching the 10-minute as well, same thing, because it got a pretty decent pump around until 3 in the morning. And ever since then, not really giving it back, but I would say maybe looking a little bit choppy, a little bit sideways. But what's really interesting to me is the 4-hour chart. I think I'm blocking this a little bit, so let me move over here. Notice how all the previous times we've tested the 4 hours just been rejected. We went up, rejected, up, rejected. Well, right now we are testing once again. And this is one of the major things I'm watching in terms of my swing trades of will the overall market recapture the bullish cloud on the 4 hour? And overall, pretty similar situation here in the NASDAQ. 30-minute dominantly bullish now, 10-minute chopping, but it was good up until about 3 a.m. And same thing on the 4 hour. I'm pointing this out. Last couple times we've attempted, rejected, 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 rejected. Now the question is this time going to be a win for the bulls or not? Obviously, we're going to be finding out. And I think if you really ask me right now, it's going to come down to this battle of 6,700. You can see, shout out to Spot Gamma right now on their Gamma influence. We have positive Gamma above, bearish Gamma below, or not bearish, sorry. I'm the one who always yells at people for getting that wrong. Positive and negative. It is not bullish or bearish. In this situation, it would end up being bearish just because we'd have slippery price action as we lose a key technical level. So I'm watching 6,700 for sure. It's going to end up being very, very important today. But the first thing that's going to be massively influential following this Nvidia report is the jobs data that is going to be coming out right here. Average hourly earnings, initial jobless claims, non-farm payrolls, unemployment rate. So we have a lot of important numbers. So let's see what's going on. You have a couple minutes. So if you rush it, yes, in time with that code Goonie, you could get 80% off the evals. This is one of those events that you could probably 50-50 on NQ. Remember, you can max it out 10 contracts on a 50K account. You're going for 16 points, half up, half down. I just want to remind you, you cannot do that with performance accounts, but it's a quick, dirty way to pass your evals if you're having issues with that. So I just want to let you know this deal is going on for another 4 hours. They are the partner of today's show, but more specifically with this event that's about to happen, we're going to be finding out about the SPY. Let me go, you know what? I'll switch it to this one. We'll go to the SPY. We'll go to the 1 minute. We'll see how this is going to be shaping up. But most importantly, we are going to be hearing from our boy Rick Santilli in a mere minute or two. So lots of jobs data, lots of information about to drop. If you choose to 50-50 this, or maybe you're just feeling strongly bullish or bearish, hey, whichever way you're going, I wish you the best of luck. Let me switch this up for one hot second to see what in the world is going on here. All right, 60 seconds left. Do we have any guesses of which way this is going to go? Are you guys voting up? Are you voting down? If you had to guess, the SPY is currently trading at 670. First minute reaction, first 60 seconds from 9:30 to 9:31. Do you think we're going to have a giant green bar or a giant red bar? Do you think this is going to help the recent, I guess, pump in the market that many of us were looking for? Or do you think this is going to completely be reverting the entire thing? If you guys had to guess right now, which way are you leaning? And you better hurry up with your answers because, like I said, we have about 20 seconds left. And when you consider the delay, you probably have maybe 5 seconds. Pop up. Green. All right. So we have some optimistic people in here today. Well, let's see. Coming out in 10 seconds. And I just want to make sure we have the audio on for our boy Rick. We do. All right. Let's see. We're trading just below 671 on SPY.
We are just seconds away from that delayed
Boom.
jobs number.
Is it going to hold? Is it going to hold?
Sharply ahead of that because of what we heard from Nvidia last night. Dow futures up by about 250 points. S&P futures up by over 80. The Nasdaq now indicated up by about 500.
All right, almost back to that pre-market high. Giving a little bit back,
in the Treasury market.
but
We have
green.
seen higher yields. The 10-year sitting right at 4.15. The 2-year
We got
at
a little bit of a
ahead of
pop.
all of this.
Come on, where's our boy
Rick Santelli is standing by at the CME in Chicago, and Rick's numbers are
Rick's
much
in
delayed,
chat, folks. It's been a
but
minute.
Still, it's data, and we will take what we can get, right?
Here's our boy.
Yes, and there's gaps.
Dapper as
from
ever.
the last data point to today's data point, there's lots of weeks missing.
All right,
in
it
claims.
is holding.
There's months missing
Bulls-
in all the
Bulls
other
on
data
parade.
points. And here we go. This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 would be the best since
Love it.
April when we were up
Love it.
158,000.
Love it.
In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected. 4.4 would, last time we were at that level, boy, I have to go back a ways.
4.4.
October of 2021 when it was 4.5%. Now, if we look at labor force participation rate,
we are moving.
Up. That's a good thing.
The market is
62.4
loving this. Holy
equals
shit.
where we were in May. You have to go to April of this year
It
when
is
it was
really, really
62.6
liking
to find
this.
a higher number. In terms of
Whoa.
the earnings,
We just went from
average hourly earnings
6,720
month
to
over
almost
month, up
6,750.
0.2. That's a bit on the weak side.
Dude,
We're expecting up
Rick.
0.3.
Rick's
up
always
0.2
bringing that
equals
fire.
where we were in
Rick's
June.
always
To find
bringing
a
that
lower
fire.
number, you are going in the Wayback Machine to
We're
August
already getting
of
these technical
23
breakouts.
when it was up 1/10. Take a year-over-year perspective. This gets better. From 3.7, our last
Wow.
look and
Bull market is
expectation,
back
to
on, folks.
3.8. 3.8 will be the best since July when it was 3.9 because these have been trending lower. The high water mark, though, for the year is 3.9, and we've had 4 months of that. The first 3 of the year were 3.9%.
VIX just collapsed. It's almost going below 20
hours
here.
Worked, and this is always important, it remains at 34.2. To find a lower number, you're going to January when it was 34.1. And finally, we get U6, the underemployment rate. It was 8.1.
VIX is
our last look,
collapsing.
it comes in at 8%.
Oh, we short the VIX team.
8% would equal
Look at
where
that.
we were in February.
We are
to find
dying.
a higher number, you're going all the way back to
Wow.
October of 2021.
Wow.
Now, we have initial jobless claims. This is for the week of November 15th. As I said, there's weeks missing. We're expecting 227,000. Comes in at 220,000. These numbers do not reflect nervousness in the labor market. They've been very well behaved. 220,000 would be the lowest level of claims since mid-July. And finally, on continuing claims, it ramped up just a bit. 1,974,000, and that would be the highest level since November of 2021. We see that interest rates had gyrated a bit, but after the dust settles, they're coming in at 4.11, which is a bit lower than a 4.14-ish.
Giving
We
a
were
bit
hovering
back
at
here.
the pre-opening equities. Certainly
What a
don't
pump.
mind these numbers. They're moving higher. We're up
Look
371
at our
in
boy.
Dow futures. And what I find interesting is these numbers
Sex
are pretty
icon.
good. They're not off the charts good. They're pretty good. The unemployment rate ticking up, though, that may fuel percentages and probabilities for that ease. However, it may not be appropriate to ease considering the puzzle pieces missing. Those are the words of the Federal Reserve with respect to yesterday's guidelines in the minutes to the last meeting. Back to the gang, and I don't know, it certainly seems as though the market is really holding up well in equities between Nvidia and what's going on in this report.
That is for sure. Rick, thank you. Stay with us. We were going to bring in some more voices on this, too. Mike Santoli is going to join us with market reaction. But first, we want to get to Steve Leisman. He's got
What's
more
Steve
on
have
these
to
numbers.
say on
Steve,
this?
good morning.
Still more likely than not, we
I'll
don't
put it
get a
in the
rate cut in
context
December.
That I see it in, Becky, which is that this report really bolsters the case of the hawks on the FOMC, who have said they do not see serious deterioration in the labor market. I'll put an asterisk next to that because I haven't had a chance, pardon me, to dig in to the household survey and that tick up in an unemployment rate. The BLS characterizing that tick up as not statistically significant, just a tenth, and I'm not sure what it rounded out to in the last month. But let me give you some data here, which is a robust
Watch
report,
for the VIX to keep
119,000,
collapsing.
and a little more context here, which is given what's happened to immigration and the labor force, a lot of Fed banks are saying that maybe you need between 30 and 50,000 to keep the unemployment rate stable. Private sector did well, up 97,000, but a big chunk of that was healthcare, up 57,000. Another chunk of that, we've been here before, leisure and hospitality up 47,000. Construction did do well, 19,000, but manufacturing was down 6,000. I see a little bit of a bump up in the probability of a December rate cut, but it's really marginal. And essentially, it seems to me, Becky, that the market may have moved on. Given those minutes yesterday, where I'd like to point out a week ago I said that Powell didn't have the votes for
this is a
rate
big
cut.
deal right here. The
I thought
4
that
hour
was sort of a
pushing back
radical
bullish.
point of view out on a limb. I may not, maybe
Bullish,
it was not radical
bullish.
enough.
4 hours also put.
A
This
lot
is a
of the
big
FOMC
deal.
seems to be against this additional cut, having done the October cut. And I think maybe the best way to put it is the market has moved on. I mean, they're looking at Nvidia, they're looking at earnings, they're looking at other stuff. The dollar's stronger. And I'll just make one other point, slightly political, which is that Powell may be doing Trump a favor by keeping rates on hold here because it's helping deal with the inflation problem. And we know that's a big part of the political problem here.
Careful when you say that around. He's going to fire your butt, too.
Fire your butt.
Hold on to
Wow,
that thought
Becky.
for just a moment, Steve. Let's bring
Should've
you
happened
Wow,
long
Becky.
ago.
Yeah, Mike, let's take a look at the markets today. How
Becky's
much of
getting
this do you think
feisty.
is because
She's
of what we're
firing
hearing with
someone's
the jobs
butt.
number, but really, how much of this is driven by what we heard from Nvidia last night?
Well, Becky, I think we did get an extra little bump to the upside in the equity futures after the jobs number. And I think that shows you that investors have craved reassurance that the economy was at least hanging in there. Once we've gotten and digested the notion, as Steve's been reporting, that there was a lot of resistance to the idea of a December cut. Once those probabilities came down, well, you want to make sure the economy was not also sliding at the time. Of course, this is old numbers. It's September. It's not dispositive. But I think it's worth noting that this is the economy that was in place when we had the meeting for which we heard the minutes yesterday. So this was the economy they were sort of responding to in general. And I think it makes sense that we're kind of in tune here. And the September projections by the median for unemployment by the end of the year was 4.5%. We're not going to know if we're there or not, but I think we're sort of still within the bounds of what was expected to be the economic conditions at that time.
Hey, I want to go back to Rick for a second. Rick, just the unemployment rate ticking up 4.4% versus 4.3%. You pointed to that as something that might bolster the Fed's case, but you don't think they should be listening to that either.
No, I personally think that as much as Mike is right, that this is a bit of a rear view mirror number, and it does kind of correlate with the minutes to the meeting that we had yesterday. I think there's a resurgence of economic activity. And I know that there's lots of anecdotal data that goes both ways, but I think it's possible that we're seeing jobs deteriorate and then come back a little bit. And I think with regard to the economy in general, I'm very optimistic. Now, just because 4.3 to 4.4 might bolster the probabilities, as Steve pointed out, in a small way, I would acknowledge that. But I think in the grand picture, Mike's nailed it, that between Nvidia and the state of the economy, the turn that we are seeing now in markets is, instead of only looking for easing from the Fed to be a big positive to bolster prices, we're now seeing that an economy that isn't sliding is a positive, and it might give us solid rates that don't go down, and it might give us better numbers on the equity side.
Hey, Mike, characterize your thoughts on the volatility we've seen in the markets with all the concerns about what Nvidia might say last
Look
night,
at that
and
VIX
the relief
collapse.
based on what they did say and what that means for the broader
Look for it to
markets.
crack this 1950
Well,
level that we saw between Friday and Monday, and then plummet all the way to 17. Watch for that crack.
There's a lot of froth that built up into the late October highs in the market. A lot of that has been flushed out. And Nvidia's numbers, I think, first of all, reinforce confidence in the AI hardware food chain, the infrastructure trade. That's what you're seeing going up. I would point out, Nvidia's bouncing back to levels we were at 10 days ago. Okay, the S&P is going to bounce to levels we were at like last week. So it's not as if we're up and away again, but it's reassurance based on kind of building up of anxiety around the sustainability of this spending. What it doesn't answer is the outlook for all these companies that are giving Nvidia all these orders and bolstering so much free cash flow in Nvidia's bottom line. So we still have that debate out there as to whether it's building towards some, perhaps unwise or ill-advised investment, but we're not close to that moment of reckoning. And I think the market can sort of say, okay, we had a 5% pullback in the S&P, a little bit deeper in NASDAQ. We had Meta go down 25% on these concerns. Oracle's 35% off its highs. Microsoft's lost $600 billion in market cap since late October. Maybe we've priced in a more cautious outlook and we can have a relief trade here in the Mag 7 at the same time the economy maybe is going to hang in because there has been unease about the consumer cyclical parts of this market. So I think it's more we can find some traction here and feel as if things are not worsening in an observable way.
Steve, really quickly, we've got to run, but we've got Roger Ferguson next. What would you most like to hear from him?
Who the fuck is Roger Ferguson?
It's the read of the household report that I'm trying to dig into right now. And I don't see, I saw the participation rate go up. Part-time for economic reasons went down. Those not in the labor force went down as well. The Fed's going to look to the household report for signs of tightness in the labor market or looseness in the, just how much slack is there. So that's, I think, a key. And maybe ask him this question, Becky. If the jobs numbers for October and November are coming out a week after the Fed meeting, should the Fed move the meeting to after the jobs numbers come out?
Oh, that's a good question. Okay. Gentlemen, thank you all. One of my favorite roundups to have you three brainiacs talking us through all of this. We'll see you guys all later. Thank you.
She's playing coy. She's
right up
trying
next,
to fire
as we mentioned, former Vice Chair Roger Ferguson will join us. We'll talk to him about what he's seeing with all this. In the meantime, also take a quick look at Warner Music Group reporting fourth quarter results.
This actually might be interesting, so we could come back to it. But anyway, if you're just joining in right now, the reason we're starting early is because this has been the first time in a hot minute that we finally got jobs data. Now, as recently as yesterday, it was going back and forth. Are we going to get the data? Or are we not going to get the data? And finally, the BLS said, yes, we're going to give you some. A little bit delayed, a little bit patchy, as in we're not getting it. Like, for example, you get the initial jobless claims every week. So we're getting some, but some of the weeks are missing. But as you can see right here, average hourly earnings slightly down. Initial jobless claims pretty much at expectation. Non-farm payrolls, this is one of the best numbers we've had in a hot minute. And in terms of the unemployment rate, this is actually a really good number. So the forecast was 4.3, but with the delay and everything, things are getting a bit messed up. So actually the market is reacting well. I believe Rick Santelli was saying that in terms of unemployment rate, and once again, this is the September number. I just want to be clear. This is the September unemployment rate, the number we were supposed to get in October. So it is a while ago. But anyway, it came in at 4.4, which is like the best number we've ever seen since April. So it's not the most recent data, but it's at least some is better than none. And if you ask me, and this is just conjecture right now, I'm not saying that this is necessarily 100% accurate, 100% gospel, but the fact that these numbers, do you guys agree that going into this, there was some sort of sentiment of, oh, wow, the numbers are so bad, they're intentionally hiding them from us? Well, the numbers are actually coming out neutral to good. And I think that is prompting right now kind of the market to have a sigh of relief, because myself included, I was thinking, like this could get a little brutal. Like there was just various things going on between the start of October to mid-November of, okay, the government shut down, but they're not giving us the data. And there was some rhetoric from various politicians and also various government institutions of like, oh, wow, like it's really that bad that they're hiding it from us. I was of that mindset. I think a lot of us were of that mindset. And the fact that they're coming out, like I said, neutral to good, when people were almost like mentally primed to be like, dude, like what is going on? Why are you not giving us this data? I think that has a measurable part to play in the sigh of relief, which we're now literally seeing in the market. So right now we're in this situation of, I can't say the 1, 2, 3 combo punch, because as early as yesterday, I was telling you guys, pay attention to the VIX expiration. Well, we saw the VIX expiration led to a big pump. and then it hit, and we kind of returned to neutrality. So that wasn't really a decisive hit for the bulls or the bears. Then fast forward to the FOMC meeting minutes that we got at 2 p.m. That was legitimately bad, to the point that it is now more likely than not we will not be getting a Fed rate cut if this ever loads. But you could see right when the information came out, and actually now, because of this data, we're seeing a trend maybe back to the chance of a rate cut. So this data more so helping us. So like I said, the VIX expiration, it was bullish and then bearish neutral. The FOMC meeting minutes, well, a lot of the voting FOMC members made it clear that we might not be getting that rate cut. And then, so that not so good. So that was a little bit of a bearish counter reaction, if you will. That led us to the Nvidia results, which were legitimately good. We can go over this in a bit, but Nvidia reported at 4:20 last night. Good numbers. And then at the 5 p.m. earnings call, for all of you who were there, shout out. I appreciate you stopping by. But for all the people who listened to it, they said everything they needed to say. So that was awesome. And then that led us to this morning, where we got these numbers, and they were pretty good. I mean, neutral leaning good. As Rick said, they're not the best numbers we've ever seen, but they're neutral leaning good. So all of a sudden, you had the VIX expiration, FOMC meetings kind of bearish, overly bullish with Nvidia, and then kind of bullish with these jobs numbers. So that is basically just setting us up going into tomorrow, Friday, November the 21st, where yes, we're going to be getting some of these PMI numbers, but remember, the key thing is not necessarily the manufacturing and services PMI, but it's going to be more so the fact that it's OPEX. And then that leads us to a very interesting math situation. We're going into today, a lot of people at puts. Remember, the yellow block is calls, the blue block is puts. A lot of people loaded into puts, which means if they decide to close them out, because they're going to be waking up to some sizable losses, if they decide to close these out, as I was explaining yesterday, that is the prime situation for a Vanna rally. So I like this. We are so back. It feels like it. Obviously, if I could tell the future and let you know, will all these puts aggressively close out? What I am looking for, and this would be like a perfect situation, because we're, like I said, the blue blocks are the open interest puts. There are more puts currently in play today and for the remainder of the week. That is phenomenal, because it's one of the important ingredients for the overall Vanna rally recipe. You want to see more puts, and then you want to see that happen as VIX collapses. Well, I see check one, a bunch of puts. Check two, VIX getting hit. Check three, price going up. Those are the three things you really need. And at this point, now it's just going to relate to the market dynamics, and basically at market open, are those put holders going to be closing it out? Because if we see a bunch of put selling and then some FOMO in call buying, you are setting up for some brutal combination of a Vanna and a Gamma rally, which can lead to a multi-day push to the upside. Now, once again, this is no guarantee. I'm honestly just letting you know what I'm looking for. And if you're going to be like a really hopeful, romantic bull, you're looking for us to hold 6,700. And honestly, this might cause the pump all the way to the upside gap fill at 6,829. I want to be very clear. This is not some sort of like guaranteed gospel thing that it will be happening. I actually don't even need that anymore. But there is this downside gap fill I should be mindful of. Hang on. Let me update this. Crossing down. And so there is going to be a downside gap fill. And then also we don't need this anymore. I just want to update the charts accordingly, crossing down. So if we were to open right at this level, yes, there'd be a downside gap fill on SPX, NDX, on SPY, on QQQ. On all those things, we do have the downside gap fill. But based on everything I said, remember, people are loaded up on puts going into today. They were betting on the situation further deteriorating. Looking at that, we have the VIX finally collapsing and we have price going up. Those are the three major things you need for a Vanna rally playing into a Gamma rally, and then obviously they can ping pong off of each other. But if it plays out according to plan, I think there's a legitimate chance that the next leg is an upside gap fill, maybe for NDX, but more specifically for SPX. I'm looking at 6,829. It could theoretically happen as early as today, but I'm looking at this, I think the odds of it are actually pretty decent between now and Monday. Some point today, Friday, or Monday, I'm looking for this upside gap fill. The one thing that I'm like just a little bit concerned about is profit taking at market open tomorrow. That is the one thing I'm legitimately, or not tomorrow, excuse me, today. Tomorrow is OPEX, so who knows? Maybe we gap up tomorrow and there's more profit taking. But as of now, the high from yesterday on SPX was 6689. We are currently trading at 6745. That is a large difference. We are right where my cursor is. There's going to be a 50 plus point downside gap fill. And then also to the upside, we have what, a 70, 80 point upside gap fill. So if the market were to open up right now, upside gap fill, downside gap fill, the question is which one's going to happen first. Looking at the other data, well, all right, I would say as of now, and granted, we're still 40 minutes from the market opening, I would say the bulls have the upper hand, but I'm just a little bit concerned, especially on Nvidia, that maybe people are going to get vol crushed because we had an underwhelming movement relative to the implied vol. I think there are people who were, yes, there were a lot of people bearish going into Nvidia. They're going to open up, their puts are going to get cooked. That's good for the bull camp. However, the bullish players who went long calls, especially out of the money calls, they're not going to be happy at market open because the implied move was 6.6%, which means that they were expecting it to go up to 200 or down to 175. We undershot the expected range, which means even people who went long calls on Nvidia, they're going to get vol crush. So my concern is that when we open up at market open, those people who are long calls, they might be underwhelmed by either the no gain, the small gain, or maybe depending on where they played it, if they played it way too far out of the money, they actually might be at a loss. So I'm a bit concerned that the people who are long calls are going to get out, and then that would drop the delta. So that's like my one like kind of big if statement here that might maybe at market open, maybe at some point today, ruin the party. But I do believe that is a lower likelihood pathway. Remember, the way I approach the market, whether we're looking at individual equities or the overall market, I, in my mind, believe it's like this intricate root system, and every particular pathway has a certain probability associated with it. This is not going to be some predetermined algorithm or something like that. It's a root way or a root pathway. And as we start figuring out the day, getting more data, certain pathways become more and more likely as other ones become less and less likely. So right now, that's what I'm concerned about for maybe one of those bearish pathways, but I don't necessarily ascribe it the highest probability. So I hope that makes sense, because remember, this entire thing, that's all this game is. It's a bunch of probabilities. Up, down, a lot down, a little up, a little down, no movement at all. They have certain probabilities. And as more data comes in, whether we're talking about price action, macroeconomic developments, options flow, it is subtly throughout the day, every single microsecond, just adjusting those probabilities. There's nothing that is predetermined, as much as there's a lot of blowholes in this world trying to tell you that there's an algorithm and it's predetermined. I'm promising you that they have no fucking clue what they're talking about. I promise you, anyone pitching you some perfect model and algorithm running the market, I guarantee you they've never been net profitable in their entire career, because that's just not how the market works. I don't want to be the bearer of bad news, but there's no algorithm you could crack that is going to make you money every single day without question. It is just truly not how the market works. So anyway, I am legitimately excited for the upside return. We're looking to recover this 50 EMA on SPX and NDX. We are looking for this little 3.5 day hiccup to be a brutal bearish trap, and hopefully we can recover. So that's going to be my major watch. And obviously the Nvidia earnings paired up with the jobs data this morning, there's a lot of enthusiasm in the market right now. The SPY keeps going, the NASDAQ keeps going, VIX keeps collapsing, Nvidia is holding. Across the board, we are seeing some very, very interesting developments. So actually, shout out to all of you in chat. I know a lot of you, I saw all the comments right before NVIDIA's report last night that many of you were bullish. In fact, I believe 2 out of 3 of you were bullish. So the 2 out of 3 of you who were bullish, congrats to you. congrats to you. You took a swing. It paid off. I appreciate the degeneracy, and I just want to be one of the first ones to congratulate you for your monster gains, especially when the market opens today. And for the 1 and 3 of you who bet against it, well, I hope it was just a small bet. I hope you kept your leverage and your bet size within control, and hopefully you can get on the proper side of whatever the next trend proves to be. So right now, things are shaping up to be absurdly bullish. But the one thing, just knowing the math and the statistics of these downside gap fills, I just need to call it out. I will, with that note, though, let you know that when the gap is produced because of news rather than just trading throughout the night session, it is less likely of the gap fill happening in that session. It's not impossible, but I just want to let you know, playing the gap fills, whether the downside gap fill or the other days we've had upside gap fills, the odds of it are not as good when it is news driven. When it's just, like I said, random trading throughout the night and we just happen to gap up or gap down, those are the stronger gap fills to play, especially for the S&P 500 and for the NASDAQ. How many of your call sheet bits hit yesterday? Can I see it right here in my cash? Is it in my portfolio? How do I see it? 3 out of the 5 hit. Position history right here. I bet on them saying the word Arizona. No, that cost me $50. I said no to the word humanoid. That did hit. Paid out 125, so that was a net gain of 75. Hyperscaler, great. Paid out 69, so that was a net gain of, I don't know, not much. Like, that was a pretty easy bet, so I think I made $16. Taiwan, I said no, they did not say it. That's great. So I made another $17 there. And then I bet $100 on them saying Trump. Did not say Trump, so that one didn't pay out. So it kind of is just net neutral. As you could see, I basically bet $100, $200, $300. And then in terms of the return, that's $140. So I made like $265 back, $270 back. So I think it was net loss of $30, unfortunately. Dude, I was just praying they would. I went a little bit too. You guys got me jacked up on them saying the word Trump in the earnings call yesterday. So I'm not going to take ownership on this one. I legitimately think that was your fault. But hey, it is what it is. So right now, I know the show is a little bit all over the place thus far this morning. I guess we just have a ton of things to talk about. So if you're just joining in right now, yes, we started early today because jobs data came out at 8:30. As you can tell from the market's reaction from 8:30 till now, obviously the market is very much liking it. And I'm loving the sound of SPX battling it out at 6,750, especially because I was a degenerate who got this position. Check this out. Everyone in the Discord knows I had this, but look at this. I bet 25,000 on 6,650 for tomorrow. Your boy is 100 points in the money. Like I said, I bet on 6,650. We are currently trading at 6,750. I'm up 100 points in the money. And I was green as of market close yesterday, barely, but hey, green nonetheless. And this was a sizable bet for my account. So I'm feeling pretty good about this. This was a good 20% chunk of my account. So I went over leverage, obviously breaking all the rules I tell you guys not to break, to never over bet. But I don't know, I guess something in my mind got a little bit tilted. So I'm stoked about this. Honestly, I should probably... Maybe I take off 2 at market open and see how it goes. I'm hoping that these are trading at, they should be doubled up. This should be about, I'm 100 points in the money. So the intrinsic itself is 100. And then I have a little bit of extrinsic value, but not much because of the vol crush. These should be trading maybe at 110, 120 at market open, and I'm in for 61. So I'm hoping it's about 100% gain at market open. We'll find out. It kind of depends on how the vol levels look and things like that. So I'm a little torn on how I want to manage it. I have 4. I might just dump 2 at market open and let 2 ride, something like that. I'm just trying to be mindful of the downside gap fill. But on the flip side, obviously, if we hold 6,750, there's a real shot today. We're talking 6,785, 6,795, 6,800. So maybe I sell two and then put a stop at like some profit level on the other two. We'll see. We'll see how market opens and how I want to manage that. But once again, I do this all on public. Like I've said many times before, they're not even the partner of today's show. I deeply, deeply, deeply believe if you are an options trader, this is the best brokerage for you. I've never heard a convincing argument otherwise that there's a better brokerage to be trading options on than public. And the argument is as easy as this. Public pays you a rebate every single time you trade an options contract. I know of no other brokerage that does that. No other brokerage that does that. So if you're an options trader, an aspiring options trader, public is the place for you to be. All right, how are we? Dude, we're still holding. I'm just watching the VIX collapse. I'm looking for a Vanna rally. Actually, let me see if I can. All right, hang on. I got to confirm a meeting. I forgot to do this. Dope. All right, that's how we confirm meetings. Vanna rally today. I have a lot. Oh yeah, dude, my crypto's getting messed up as well. QQQ. All right. All right. Before we get into some of the pre-planned news and whatnot, I have a lot of things I want to go over with all of you. Do we have any questions, comments, concerns about any of this stuff that's been going on recently? Before I just want to do a little bit of a mini AMA. Do you have questions on the Nvidia news, on the jobs news, on Apex, on Funded Futures Network, on my positions? Do you have any questions on options? Like I know I've been talking about Vanna rallies and Gamma rallies. Do we have anything? It's a little bit smaller right now. People haven't woken up yet. So it's a little bit easier for me to handle whatever questions are coming on. So before I get to all the prepared things that I want to go over with you today, any questions, comments, concerns you want me to dive into anything? Matt, did you get a chance to look at Trader GPT? I did not. But what I'm going to do is just put it down in my watch or my to-do list right now. Trader, what was it? GPT. All right, done. What shampoo do you use? Old Spice, the one with the bear. I don't know what the name of it is, but there's a giant aggressive bear on it. I joined the Goonie Discord. Does it have to go through Locals? Yes, it for now it does. That because Locals is the payment handling mechanism. And as soon as you're paid on Locals, that's where you can sync your accounts and then get the appropriate thing. Didn't see what happened with the jobs report. Did they come out? Yes, 8:30. Yeah, dude, you are 31 minutes late. They were neutral to good, which is why the market is currently up. Crypto, question mark. That's not a question. You just said a word. What's your favorite food? Half rack of ribs from Texas Roadhouse. What's your bicep superset? Hammer curls and preacher curls. And I just do it till I want to fucking scream. What about an AMC rally? Please don't ban me and ban Trex instead. AMC is not going to rally. It's a dog shit company run by a actually retarded amount of people. Like the board is as stupid as they come. And the only thing dumber than the board is the people who still support it. Any opinion on SoFi? Yeah, I mean, it got clocked pretty bad recently, but it's showing some signs of reversal right now. I did set up some alerts on it. I'm looking for this recovery of the 50 EMA. If you're going long on it, your risk is pretty well defined. Oh, wow. That did not feel good on my back. But anyway, your risk is 25. So if you're playing it here, I don't mind the risk reward. You're risking $2 to potentially make 5. So it's a 2.5x risk reward. I don't really have opinions on it as like a fundamental play as an investment, but as an active trade, this stock can move. And I do like the risk reward because it's favoring you to go long. The one thing I would just call out is the downside gap though. How bad do you expect the vol crush to be on Nvidia? Well, it's not like really a base expectation like that. We can actually do the exact math. Fall dashboard, Nvidia, like this is just like a math equation. Term structure, and then right here, term structure. Today, are we looking for 30 days out? You know what we'll do is we will go from yesterday, today, and yesterday. So that's your vol crush right there. You can see the IV. Like we're just literally doing a base comparison from yesterday to today. And that is the differential. It looks to be It went from 145 to 122. So it's noteworthy in how much the vol crush is. But like I said, that is not really, I think it's going to be this. It's just a math equation. Like we could see the vol coming in, and it's going to be kind of bad, maybe even more so than expectation. Obviously, we have the data, but I'm saying the data itself is probably worse than people yesterday thought because we did not move as much as they thought. Do you think Michael Burry gets out of the new big short? It's really not that big of a short. A lot of people think it's a multi-billion-dollar position, and they just don't understand how puts are reported in those 13F filings. It's really not that big of a position. Obviously, he's going to be down money on it for sure, but I saw a lot of misunderstanding thinking that it was like 60% of Scion Capital. It's simply not. It's because when you report in those things, you have to report the notional value of the puts, as in you have to multiply it by 100. So whatever number you're seeing, as in like him betting against Palantir and Nvidia, which I would have never taken that bet, basically you have to move the decimal over by 2. Just because, once again, it was reporting the notional value of the options. So a lot of people are misinterpreting that a lot. But once again, regardless of the size or not, he's going to be down on it. He's going to get crushed on Palantir and Nvidia, which I don't understand why he took that bet in all reality. Palantir, PLTR produces a profit. Nvidia produces a profit. So if you're really against like this tech Mag 7 AI hype wave, why don't you bet against the ones that haven't been producing any profit? In my mind, if you're going to bet against the hype, bet against Qubits, bet against Rigetti, bet against IONQ, bet against Iron, bet against all of these, maybe even MicroStrategy. But to go be betting against not only like Wall Street favorites, but you're betting against Wall Street favorites that have been producing profit. So if I'm taking this large anti-tech bet, I'm going against quantum computing because right now I see a lot of similarities of the support base in quantum computing as I did with AMC and GME. There's a large retail base that simply doesn't understand what they're doing. And what's worse than that, these companies are not producing a profit. They're not close to producing a profit. And if you look at the business model and if you look at the science, this is not going to be fundamentally viable for many years, if that. And this pump was one of the most evident, like just pumps leading to dumps. So I don't understand why he went against, I just don't see why he went against Palantir and Nvidia, where there were other ones that were up a bigger percentage that were fundamentally worse companies. Explain again, BOGO FFN network, buy one, get one. That's what BOGO stands for. So when you log in, you buy an account. I like the standard 50K account. You put in that code Goonie, you're going to get a 50% discount. Once you have that receipt and proof that you bought one, you email them right here. Email them again. Oh, right here. Email your receipt. It just says it. Email your receipt to the support, just send them your receipt, and then they'll send you back another code for a freebie. So when you buy one, you get one. But in terms of explaining it, honestly, it's just read these 2 sentences. You buy one, you get one. When you buy one, email them your receipt. They'll respond to your email with another code, with a freebie code, where you're going to get a whole nother account for free. So basically all in, you can get 2 accounts, no activation fee for $75. And then right now on Apex, when you run all the math, it's 35 plus 40. So it's going to be another $75 for a full account there on Apex. So I use both. I like both. The rules are not exactly the same. They're slightly off, but I do like them. Right now at this I want to be very clear on this. The world of prop trading, this industry is exploding right now, and there's a lot of moving parts, and there's a lot of drama, and there's a lot of updates on a daily basis. So I want to make it very, very clear that I nor you should ever have loyalty to one firm. At any given day, at any given moment, use the best firm with the best offering, with the best set of deals. It's not like you'd have loyalty to a certain casino. Just take advantage of the one where you have the best odds of success. Right now, I use Apex, I use FFN, and I use TPT, Take Profit Trader. Those are the 3 I use. At this moment in time, I like them the best. I like their rules. I like the cost. And at this moment, I trust them. But I want to be very clear. this does change. Does FFN have a 1-day pass? No, the fastest you could pass is in 3 days because they have a 40% consistency rule. But then after that, you can get paid out very quickly. So like I said, the rules are slightly different, and those are the three I use, and I kind of play them off of each other. But I just want to make it very clear, my thoughts and opinions on this, that you shouldn't have loyalty to any of it. Use the best one for you at that moment in time, and understand that the industry is very dynamic. It changes quite a bit. And at this moment in time, the ones I use are Apex, FFN, and FFN is Funded Futures Network, and then TPT, Take Profit Trader. If you have ones that you like and you think I should check out, feel free to DM me. I'm more than happy to add ones to the roster. I'm more than happy to remove ones from the roster. I just want to make it very clear that the entire situation is very, very dynamic. Unfortunately, it changes a lot, and there's a lot to stay up. I should probably make one of those websites where I compare it for all of you. Have you guys seen some of the comparison websites where they update with the current deals and you compare the accounts and you could get the true cost versus, because there's just so much noise. And so I should do that. I should just make a freebie website that compares them all for you. So at a moment's notice, you can see who the current deals are, and maybe if there's breaking news and drama and that type of stuff. I should probably make one of those. Maybe that'll be a holiday project for me as we take a little bit of time off for Thanksgiving, a little bit of time off for Christmas, just because no one cares about the market then. Maybe my holiday goal will be to make a comparison website. Obviously, it'll be free and just whatever. You guys could check it out and at any moment know who is the best. All right. Maybe I should get to what we should really get ready for today. Stock futures rally as Nvidia's strong forecast reignites the AI trade. Yes, right now in pre-market trading, we are looking pretty good. SPY is up, Qs are up, VIX is down, Nvidia is holding, even Bitcoin. Well, Bitcoin literally just took a hit, but that is clearly the weakest trade right now, while a lot of equities are recovering, looking pretty darn good. Before we get into the specifics of the economy and the stock market, I just want to quickly touch on some political drama. Trump signed Epstein Files bill after fight that split the GOP. Epstein Files bill signed by Trump, starting a 30-day timer for their release. So basically, I guess maybe Christmas is going to come early for all the conspiracy theorists, because we have 1 month to be getting this information. President Donald Trump said he signed a bill ordering the Department of Justice to release the files on the offender Jay Epstein. The announcement is on True Social Post, followed the bill's near unanimous pass in Congress. I believe there was one person on the House who said no. The bill instructs Attorney General Pam Bondi to publicly release records relating to the Epstein and the convicted accomplice, his wife, within 30 days of signing. Now, does anyone really think that we're going to get all of the files and they're not going to be doctored? I feel like we're going to get a lot of files, and it's going to be one of these things to just I guess, quench the public's thirst, if you will. But I don't know. It just really, really feels as if we're not going to get the full thing. Does anyone actually think we're going to get the full, legitimate, undoctored thing? This seems like, I suppose, there's a generic public outroar that we want these, and we should want them, because it seems like there's a lot of scumbags with a lot of incredible power that they should not have. So I'm not against that in the sentiment, but it just, people are saying that this is a threat to national security if it comes out and full fledged and this and that and the other thing. So and I hope I'm wrong on this, but it does feel as if we're going to get a redacted, watered down, doctored piece of information. I don't have really any legitimate hopes that we're getting the full-fledged thing. But once again, just my opinion, and I would love to be proven wrong on that. Trump administration pushes new plan for ending the Ukraine war. So I wanted to bring this up. Some breaking news. The 28-point proposal drafted by some of the president's closest aides is likely to face strong opposition from Ukraine. So we haven't talked about it in a while, just for whatever reason. It hasn't been mainstream media in a hot minute, but obviously this can have lasting implications on global trade, what's going on with energy. There are far-reaching global economic implications. So I just want to bring this up just in case this particular storyline has a little bit more traction than we expected. So we might be hearing about Russia, Ukraine, US. It kind of went silent there for a second, but this might be coming back into the news. So just wanted to put that on your radar. This September jobs report is finally coming out today, Thursday. Here's what it is expected to show. So that was the big news as of 8:30 after going going 6 weeks, 7 weeks without jobs data. We finally got some. It was neutral to bullish, and that's part of the reason why we are building on the pump from the Nvidia earnings. So kind of that 1-2 combo punch from the world of Nvidia, from the world of jobs, and Nvidia is holding. SPY and Qs are going higher. As of right now, we're running into a little bit resistance at 6,750. So we're going to obviously be waiting around to see how either that does or doesn't play out. I do want to let you know that tomorrow is OPEX. Options expiration is the monthly OPEX. It is not a triple, quadruple witching. And also we're getting some PMI numbers tomorrow. Technically, earnings season is like still on, but I think in most of our minds, the fact that Nvidia has reported, Walmart has reported, it's pretty much over. You might want to be paying attention to Webull. I'm going to be looking to it because I believe this is their first like public earnings. So we're going to basically find out how much money they're making from payment for order flow, which is a disgusting practice. And that's one of the reasons why I'm on public. And I think you should be on public as well. But anyway, just to give you a quick recap of Nvidia's upbeat forecast soothes fears of the AI market bubble. Nvidia stock pops 5% in pre-market trading after stronger than expected results. Nvidia's strong results show that the AI fears are premature. I'm bringing this to your attention because I think it's so comical. Depending on what news you are consuming, they're taking the news from Nvidia to mean completely the opposite thing. Chipmaker says demand looks strong through next year, while a sell-off has made the $4.5 trillion company look cheap. What you need to know is Nvidia beat on top and bottom line. They beat on revenue, they beat on EPS, their margin was pretty good, and they also increased their future-looking guidance, basically saying we cannot keep up with demand. That's how crazy it is, mainly being driven by data centers. And going into it, a lot of people were asking the question of, is the AI bubble going to pop? Obviously, you have these hardcore tech bulls such as Dan Ives and Tom Lee, and everyone's very, very excited about it. And then on the flip side, you have people such as like Michael Burry who are like, nope, or Michael Gade or whatever his name is. But you have these two camps of like, no, we're going to keep going. And then the other camp, like they're completely at odds with each other. And we're even starting to see that in news. So right now, Wall Street Journal is saying, okay, it's premature. But then check this out. Nvidia sent a strong signal on AI infrastructure, but is the bubble a barometer? Right here, where was it? Some analysts say the long-term AI growth still looks solid, with hyperscalers betting on surging computing needs, while others are saying, nope, this is actually just like the final little gasp and it's about to collapse. And then, of course, when you go to Nvidia itself, Nvidia CEO Jensen rejects talks of AI bubble. We see something very different. So as always, you could find any piece of news that's going to support your bias. So if you're approaching the market, whether it's a day trade, a swing trade, an investment, there's a very, very good chance, a very, very high chance that whatever your preconceived bias and notion is, you could probably find something that supports it. So at the end of the day, I think sometimes it is good to pay attention to the news, take it in, consume it. And then as important as that is, I think it's as important to completely forget about it and remember that price is king. So whether we are sitting here saying we are bullish or bearish on Nvidia, all I can tell you is we are seeing a continued succession of higher lows. We saved the EMA cloud. We saved the 50 EMA. There is a technical breakout at 200. There's a downside gap fill at 187. At the end of the day, you're either making or losing money off the price movement, not necessarily your interpretation of earnings, your interpretation of someone's news. At the end of the day, price is king. That's what makes you money. That's what loses you money. It is not like you get some extra special medal or star or cookie for being the person who interprets earnings or news or this or that or right. No. That's not how it works. So as I kind of was joking, but in a weird sense, I'm actually very, very serious about it. Like, sometimes I feel like we'd all be better off not consuming news at all. Really. I think sometimes if we kept it as basic as what is price structure, what is price momentum, what is options flow, where's the big money at, not really trying to map our own opinion and thesis and interpretation of news on top of price, I actually think we would probably be better off. So who's right, who's wrong, I don't know. I'll tell you better at the end of the year. But right now, I can see we are continually having higher lows. We are saving the 50 EMA, and today will probably be pretty telling of is there going to be any follow through. Not really directly related to any of that, but just kind of interesting with AI. Musk's xAI and Nvidia to develop data center in Saudi Arabia. Executives unveiled plans on Wednesday gathering featuring President Trump and the Crown Prince MBS. So XAI growing. We know they're obviously Nvidia having good relationships, not just with XAI, but also OpenAI, aka ChatGPT, and many, many other companies. So that was the hot news as of last night. The hot news as of this morning was the jobs data. And on top of that, we also heard from Walmart. Walmart hikes sales and earnings forecasts as it attracts shoppers across incomes. So another positive piece of news right there. So that's pretty much what you need to know going into today. If you haven't already, sign up for the newsletter, mattKohrs.locals.com. It's in the description of the video. My mod will put it in chat. It is 100% free every single Sunday. You get a breakdown of what's going on in the market. Little cheat sheet for earnings. This is from @eWhispers. This section will be a little bit quiet from here on out until next earnings season, just so you know. And then obviously all the major macroeconomic events where we're finally getting some more. At this point, I'm mainly waiting for tomorrow to get some PMI numbers, to get some consumer sentiment numbers, and also to be getting some of those, OPEX results, for lack of a better term. With respect to seasonality, historically, the Bulls have won this day more often over the past 3 decades, but when the Bears win, they win with more size, so it's ended up being kind of an awkward neutral day. But I do want to let you know tomorrow, Friday, November the 21st, actually does favor the Bulls from a seasonal perspective. Once again, the Bulls winning it 61% of the time, so I would say that there's a little bit of an 11% edge heading into tomorrow. And then for today, like I said, there is an edge, but when the Bears win, they do win with more size. So let's hope it's more of this recent trend than some of the earlier trend that we saw. Like I said, you can get this for 100% free. You've never had to pay for it. You never will have to pay for it. If you're watching this right now, you might as well sign up because there's legitimately no risk to you. All right, bringing it back to the market, we are looking good. Let me switch it up to the 1 minute, Nvidia's there. I know many of you want to watch that today. So do I. What do you guys want to watch up here? I'm looking for the VIX to crack 1950, and we are getting very close. So I have that alert there. We don't necessarily need that up. Do you want Bitcoin up this morning? Do you want Avago, which is also looking really good? What do you guys want up here? We have about 10 minutes to go till market open. What is the hot ticker, the hot equity, the hot crypto that you guys are very interested in? Nvidia's up 5%. Avago's up 3.7 after gaining 4% yesterday. Tesla's up 2. What's up? Google's up. Google's been pushing. That might be another one worthwhile to watch. You have Palantir up 4%, but it lost some yesterday. It feels like the other hot stocks this morning are Avago and Google. They're up quite a bit. So Avago is probably going to be moving the same way as Nvidia. So for now, we'll leave up Google, see how it goes, see how it doesn't go. And I'm more than happy to switch it throughout the session today, obviously. As of right now, the 5 minute, 10 minute, 30 minute, and 4 hour, 5, 10, 30 are clearly bullish. The 4 hour is in the middle of a bearish to bullish transformation on the S&P 500. 5 minute, 10 minute, 30 minute on the NASDAQ, also bullish. And we are looking to see if maybe this does or doesn't push, but same thing, that transformation. These are all the key levels. Feel free to screenshot this. Feel free to use it. Feel free to not use it. A lot of it is already changed because of that jobs report, so I might need to update this. Wow. All right, let's go to the 0 DTE. All right, so we are looking to see 50 is the first battle. Then you have 75, then 90, and actually 810. You have a lot of people playing 810. So I might need to update a little bit of this just so we have some of these levels. So you know what we're going to do is we're going to clean this up. We're going to move this one to 30. We're just going to cut that region in half. We know some people are playing 75. Cool. And then we know if there is an overshoot, we can see call credit spread currently being established at 810. All right. So I believe we have that all right now. There's 90, there's the 100, there's the 810, there's the 70, 75. What is this? That is the 810. And then there's a lot of calls being sold all the way up at 860. So that would be dramatic reach targets. I mean, I could throw it on the chart if you want. Obviously, we have quite a bit of distance to go. But hey, it might be in the cards today, especially if we get a full-fledged Vanna rally. That would be low probability, and it would also involve a pretty clear technical breakout by the time we get there. Just watching this downsloping trend line from the all-time high to the recent spike. So if we do hit that level, it would be the trend line break and maybe a potential rejection. Like I said, that is a dramatic reach target. I think our time is probably better spent paying attention to some of these other levels throughout the day. But We're seeing some positive gamma. There's still clear negative gamma below us. I'm looking for the bulls to stay confidently above 6,700. That is a big win in my book for the bull camp. It's one thing if we test it, bounce off of it, go under it, bounce off of it, especially because there's negative gamma there. But the interesting levels at this point to the upside are 6,750. Then from there, maybe a little bit of 85, 95, 810. Like, this seems to be the next generic test zone. So I'll happily keep that updated throughout the day, and we'll see if we can pay attention to any new trades. And I do expect within the first half hour of the day for there to be a dramatic amount of new positions being created. I'm expecting quite a bit of movement in the overall options flow. So just please be mindful of that today by no means is going to be a dull day. Well, I mean, I guess theoretically it might, but I just think the odds of it being a boring, like, dull day are very, very minimal. All right, let me get up the Mag 7. Let's just get ready for market open. All right, we're good there. We're good there. Let's get going. Let's get going. I do need to do one thing with my accounts very quickly. All right, we have that. We have this. This guy's chit-chatting. I have no idea what they're going on about. Probably just saying, we knew it the whole time that the market was going to bounce. They even have our boy Jimbo Cramer on right now. All right, we have about 6 minutes to go. Let's see what Jimbo Cramer's talking about.
What you could do here, and I certainly have reported on Paramount's efforts to do that and give him a substantial role, make him a billionaire, for example, as well, given what they'd be willing to pay, and give him a significant role at a combined Warner Brothers Paramount. So that's not an unimportant part of it, but one would expect that ultimately the board will make a decision. After all, Mr. Zaslav does work for the shareholders, so it's not just about pleasing him.
I'm just updating my
the best you can
bots
for your shareholders
today,
and getting the highest value with the most certainty. And again, the pole position on both of those has to go to Paramount, but we'll have to wait and see. And hopefully I'll have some reporting on what Netflix did, if they bid, what they bid.
And to be dispassionate about it, I think yesterday you talked about how it seems that Comcast really doesn't have the horses.
It's very difficult. It's just very difficult for Comcast, given the multiple at which its stock trades.
Let's get these bots rocking for the day. As you can see, I haven't done any trades yet.
And so you're left with
they don't seem to be talking about anything interesting. It's just how everyone wants to be Paramount, basically.
It just means their chance of succeeding would seem to be fairly low.
Why do you waste your time? Why do you do that?
Got to try.
Oh, what?
It's important.
Try what do you like?
Warner Brothers Studio, the opportunity for the cost savings there, enormous the library again, which obviously is of great interest to Netflix as well.
All right, we're going to enable the long for market open for obvious reasons.
I just think that multiple is the lowest.
Bots are on. Bots are on. Bots are on.
A company that is still solvent.
And the 10 o'clock going to have a lot more from Malone, and particularly on
I'm
the
ready
state
to go.
of the cable industry. Carl, not going to want to miss that. Yeah, he had some interesting thoughts.
That's pretty boring. All right, we have about 3 minutes to go until market open. Someone just tagged me on something. Is this important? Breaking, experts shot by U.S. ads stunning. Okay, we talked about that. Wow, non-farm payroll is up a robust 119. 119 is the best since April. Yeah, we watched that live. Our boy Rick Santilli always crushing it. Very quickly before the market opens, finally Apex's website is working. So recently, if you've been trying to get one of these accounts, you can do it. Like I said, just go to Apex, use that code Goonie. 80% off, so a 50K account will cost you $35. But the best part of this deal is the upgrade fee. The lifetime upgrade fee is only $40, so you could be all in for $75. That is the best deal I've ever seen them offer. And then also, if you want more accounts, and you could have up to 20 on Apex, and I believe you could either have 5 or 10 on Funded Futures Network. Please, someone correct me if I'm wrong there. Same thing, code Goonie. Here, you buy one for 50% off. So instead of being $150 for a 50K standard account, it'll be $75. When you buy one, it's buy one, get one. So just send them your receipt, and then they'll give you a coupon code for another one for free. So you can get 2 accounts, no activation fee, for $75. So basically today is the day of $75. Great opportunity to take advantage of. And I have to admit, I love the increase in competition in this industry because it's basically driving prices lower. That's going to only be a benefit to all of us. Obviously, all these companies are attempting to get our business. So the fact that there's more and more and we have an increase in competition, I'm loving it. I'm absolutely loving it. So I hope you guys are taking advantage of it as much as I am, but it's nice to see that my monthly credit card bill is finally taking a little bit of a breather, even though I'm buying more and more accounts. It's just because prices, due to the competition, are being driven down and down and down. So I, for one, am a fan. So check it out. Obviously, if you have any questions or comments or something like that, let me know. Let me know. And we are about 2 minutes out. So with the final 120 seconds. With the final 120 seconds, my question to all of you is, do you think we are currently scheduled to open around 6745? So roughly where my cursor is right here. We are gapping up to right about here. Do you think this is going to be a runaway train that goes for the upside gap fill? Or do you think this is like kind of a bull trap and we're actually going to go for the downside gap fill? Do you think there's going to be too much profit taking? Do you think there's just too much pre-market enthusiasm? I kind of want to know where you guys are at in the community this morning, where chat's mind is at. Like I said, we are opening up here. There's an upside gap fill. There's a downside gap fill. Which one do you think is going to prove to be hit first? Do you think we're going to get the upside, or do you think we're going to get the downside? Which one are you guys bullishly optimistic, or do you think that maybe it's going to get blown away? Might be dumb, but why would someone want multiple accounts? Easy answer: for more money. If you make $1,000 on one account, that is less than making $1,000 on 30 accounts. You'd be making $30,000. Bull trap, I think profit taking, I need the downside gap fill. Bull trap, 1 minute, upside, up and away, leaning towards the upside, luring the retail, then pulling back. Remember, retail doesn't really move the market. There's this idea of like tricking retail. Retail doesn't really move the market. They can on individual names, especially if they're illiquid, but think about the fact that there's like, when you look at all the billions, if not trillions of dollars of investment funds and hedge funds and market makers, that's what moves the market. It's not retail. If it give you $5 if you stream on the straight stair stepper so you can do the market climb. So you want me to pause it real quick and go to the stair stepper? Maybe one of these days. Downside so I can hit eject and reposition. Pamp, then dump. Pickle Me Timbers is calling for a pamp and then a damp. Bulls on parade, upside for 30 minutes. I say bull trap. I have a lot to learn. There may be a cap limit per account. I want to rally. Fourth higher low is what I'm looking at. We're planking, trying to move with the tides. Well, on that particular note, dingity, ding, ding, ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we're seeing a little bit of that profit taking. The question is, how extreme is it going to be? How extreme is it going to be? How extreme is it going to be? And the question is, should I dump some of these right now? Currently up 17,000, up around 70%. So like I said, I was looking at 100, but that was also when SPX was about 10 points higher than it is right now. So I probably need to manage this. Well, not probably. I definitely should manage this at some point today. So I'm going to try to get a vibe. I don't want to do anything overly crazy. I am watching Nvidia. I am watching Google. I am watching Avago. How's Avago looking? I'm still down, unfortunately, on my VIX puts here. Where's VIX at? 1950. You'd think that that would be puking a little bit harder, but let's see. Let us see. Let us cook. Where are we at? We're already at that key level of 50. Let me go back to the 1 minute here. So we're at, oops, made that bigger. We're at 50.52. Next target is 75. So if you think it's going to get rejected, you're playing 30. If you think it's going to get pumped, you're playing 775. That's the first bull target. This is the first bear target. Google's taking a hit this morning. Nvidia did take a hit and it's already bouncing. Let's take a look at the options flow on the day. And let me also make sure. All right, we did that. We did this. Okay, options flow is decent thus far. All right. Options flow is decent thus far. VWAP is just beneath at 150. We're going to be paying close attention to that. I'll zoom in here. I haven't done any trades yet, but I do have on the Icarus bot. The Icarus bot is officially enabled for right now. I have the long side enabled just because of how strong things look, but I might switch it throughout the day. We're going to be finding out very, very shortly. very, very shortly of what in the world is happening or not happening. I'm attempting to not make any rash decisions out of the gate. I'm trying to give it a second to breathe. Obviously, I'll feel a little bit more comfortable about being calm if this keeps going. I see the VIX is collapsing over here. The VIX did take out 1950, currently at 19.3. It'll be interesting to see if it takes out 19. So maybe I'll set an alert at like 19 right here. Okay, add alert. So I have an alert for the VIX breaking down, and then I'll have it also for a bit of a rebound. I'll put it at like 1980 in case there's a bit of a bounce. So we are not going to be missing out on any clear movements on the VIX, so don't you worry. Right now, the SPY is up 1.6%, the Qs are up 1.8%, and actually the Russell's up the most, up about 2%. Bitcoin is slightly down, currently trading at 91. Broadcom is actually up the most on my watch list. It's up 4.6%. Nvidia is up 3.4, but we do have that profit taking we talked about. Tesla is up 3.6, Google's up 2.5, Palantir's up 4, Microsoft's up 0.7, Apple's up 1.7, and Meta's also up 1.7. So right now, even though Nvidia is going down, Broadcom's going up, and they are in the same industry. Kind of interesting. Mag 7 option flow is strong thus far. SPY is perfectly choppy, perfectly sideways. So calm, cool, collected. Let's not be chasing. Let's not do anything too crazy. Do I just want to take all these? I'm so deeply in the money right now. I'm almost 100 points in the money on this SPX play. I'm just trying to not make a rash decision. What you're seeing on Nvidia right now is another reason why I think going long calls or long puts into earnings is generally just a losing game. I really deeply believe that, because you have such a high chance of vol crush, and then even if you're right and you're not getting vol crushed, then you have profit taking, whether the bullish or the bearish direction. It's a brutal game to try to play the overnight reaction to earnings. And in reality, I do know of some people that are net profitable doing it, but it's fairly complicated methodologies and systems. So I don't think it's for people who are maybe kind of finding their footing in the world of trading. I think that there's maybe other things you should be doing and learning first before trying to go long calls or long puts into earnings. Like, I deeply believe that. I'm not saying it's a bad strategy, and I'm not saying you're guaranteed to lose money, but I do think that the average trader, retail trader, underestimates the difficulty of what you have to do. I got these crazy indicators, going to make another 5K today. Maybe not. I made 100% off my calls and sold at open. See, that's a smart way to do it, is like just play it right at open. That's a strategy. If I had to go long calls or puts, that's how I do it. I would do it at open. This time, instead of getting exposure to Nvidia, I did a sympathy play trying to avoid that vol crush. I played Avago, and obviously that one is working out well for me. So it's just playing a game of vol, but I'm up 134%. I'm up 13.5K on it. So it's in the same industry. I was playing the sympathy play. I gave myself time. This is the second time I took a stab at it. I did try to take a stab at it earlier this week, and I unfortunately just got knocked out of my position. It just hit my extreme of risk management. But then it fired off another bullish signal, and as you could tell, I got back in. So right now, I'm getting exposure to it through the sympathy play. And honestly, I think that's a better way to do it, just because, once again, it all comes back to the world of understanding the Vega impact and the Theta impact of earnings. Past 2 new evals in 30 minutes. Nice week. Congrats. I'm hoping to pass some of my Apex evals today, but we're going to see how it goes. I haven't done any trades yet. Yes, I have my 15 performance accounts on Apex. I have my FFN, and then I have these new accounts that I'm working on right here, as you could see. Let me clean this up a little bit. And I'm letting the bot take advantage of it. I'm trying to not really rush anything too early today, because these ranges are crazy already. As you can see, let me move that up here. Let me slide this over just so we can see a little bit more. But I mean, we're moving 70. I mean, that was a 30-point pop, and it took less than a minute. I mean, from 934 to 935 in 90 seconds, we went from 50 to, that's a 75-point movement. That's crazy. That's absolutely nuts. So this is a time where you want to size down, because if you're on the right side of the trend, it's going to move so much that you're probably going to get more profit than you're used to anyway, to be completely honest. So this is a time I have one contract ready to go. I don't need to be oversizing today because, like I said, if you can get on the right side of whatever the movement is, it's a lot of money. But if you're playing your quote unquote normal size, which might be a little bit too big for this environment, and it goes against you, you could really, really get hurt and get really hurt really fast. So I'm once again, for the fourth time this week, sizing down and just trying to stick to exactly my plan. And I'm going to look at all the Icarus signals. And if I like it, I'll take it. If I don't like it, I might skip it because maybe the risk is a little bit too big. But right now, the ATR, if you're looking on the 500 tick, the 1 minute, the 2 minute, we're moving some size right now. We are seriously moving some size right now. So it's a good time to just be calm, cool, collected. Remember, if you're a day trader, scalp trader, you just like one perfect trade a day can make you a lot of money. So don't feel that pressure that you have to trade right now. And this is one thing that I've really battled with in my trading career is it feels like if you're putting in that time and the effort to watch the charts and pay attention, it feels like you almost like deserve something for it. And then all of a sudden you start maybe throwing on trades that you shouldn't be throwing on just because it was the fact that you were already sitting there paying attention. But the chance of the perfect trade existing right when you start looking at the charts, it's pretty freaking small. There's a very good chance that you're doing a lot of sitting around, a lot of waiting, and then all of a sudden, if you see that perfect risk reward entry that's with trend, or maybe you're a mean reverting trader, but you know what I mean. When you're seeing your perfect setup, eventually it's going to come, especially on days like today.
Target filled.
Well, bot's already ripping it. Bot's already ripping it. 1, 2, 3, 4, 5, 6. Okay, so we're trading the bot on 6 accounts today. And there's a little bit of slippage. It's the same system, same strategy, just independent accounts. And the same system is running independently. A little bit of slippage. I'm seeing gains as high as 123 all the way down to 23. So a little bit of a 30-point slippage right there. A little bit of a 30-point slippage, which on this environment, I honestly think that's like relatively small. So, hey, we got the first bot trade out of the way. We got the first bot trade. Not bad. So we have about $600 already locked in. $600 already locked in. Tips or recommendations on where to get started with using bots. I have a lot of free videos already up there. There's more in-depth videos in the Goonie Trading Discord. But if you look on my channel, like for free for you to get started, it's up there. I mean, I have actually an entire series on it. This is also on Rumble, just so you guys know if you happen to be watching on Rumble. But if you go to my other channel at Matt Kohrs, this is the Matt Kohrs Show. I guess we're trading again. All right, we doubled up. We're up to 200 now. Anyway, right here. Once again, this is free. Like I'm not charging for this at all. Right here, easily build your own AI trading systems to pass Apex. So there's a 1, 2, 3, 4-part series. Once again, you can watch it for free, but this is why people aren't successful. Can you see the die off? They watch the first video, 4.2K views. Then it gets cut in half. Then it gets cut in half. And then those same people get all the way to like what they actually really holistically need to be knowing. But this is why people aren't successful is they give it a little half-ass attempt. They watch one video, they try it for a day, and then look at 50% attrition, 50% attrition. But that's where you could start. It's free. Excuse me. So obviously, that's a starting point. There's a lot of great books. There's a lot of great services out there that like try to get more into it. But if you're just saying, hey, I'm kind of interested in it and I don't want to take on a financial risk, as in I just want some education and some teachings for free, yeah, that's what I would say. Start there because once again, it's a free video
Order
on Rumble.
Submitted.
Uh-oh. What happened here? This trade should not have been taken. That's too much risk for the bot. Maybe I should be watching my own videos. Something happened there, but it didn't fire on this account? Strange. It should not have taken that because it was too much risk. That wick, this bar was too big of a bar. The vol is getting pretty crazy right now. These are about to get
Order
clocked.
canceled.
Yeah, that was an inappropriate trade. It should have never done that. Maybe it'll get lucky with a comeback, but something was off there. Did I? Oh, I know what happened. I know what happened. I was working on making the risk dynamic based off of ATR rather than a I whipped the code up, that code up 2 mornings ago, and in an effort to do it before the stream, I had in a hard coded number rather than an ATR based off the 1 minute. That's a fucking bummer, dude. I just didn't deploy the right code. I know exactly what it was. It was because 2 days ago, I had a hard-coded number of, hey, if it hits 2K, just cut it. While the real code should be based on the ATR because that expands and contracts with volatility itself. ATR is basically a vol measure. So maybe these can save themselves. Maybe they can get lucky. I don't know. We're going to be finding out. But it should have cut itself right there, and I just didn't deploy the newest code. And I can deploy the new code right now, but I just need these positions to close out. So maybe I could get lucky and it could get its fill, and then I could update the code quickly. But I basically have like Icarus long version number 2. And as you can see right here, I'm currently running Icarus long, which is the first version. So maybe I could get a lucky fill. Maybe, just maybe, there could be a lucky fill. Come on, brother. Also, there was a little bit of slippage on the entry as well. That's a bummer. Slippage.
Target filled.
Yeah. So it's just running the old piece of code. It's just running the old piece of code. Look at that recovery, though. Dip buyers are coming in like no other. Dip buyers are coming in like no other. Oh, brother, how do I want to do this today? How do I want to try to fix the code right now and risk breaking the code? That doesn't necessarily seem like the smartest decision. Do I want to risk breaking it, or do I just want to I don't know. Seems like there's a risk involved in doing that. You know, hot swapping out the code where I could like manually watch it. I'm a little bit torn. Oh, sorry. I wanted to show you this. My question is right here. You can see all this. Hang on. Let me line this up. Oops. Right here. You can see all this code I'm attempting to run, but do I want to hot swap it out right now? Feels like there's a risk either way. So on one side, I have the risk of running the code I don't want to run, and I run into high-risk situations like you just saw, which I'm not necessarily a fan of, especially on a day like today. But on the other side of it, I have the risk of if my code, I didn't put the newest version through testing, and what if that code is bust? So there's risk-reward on both sides here. There is risk-reward on both sides. Fun fact, if it breaks above 24, it'll take a long. Fun fact about my code right now is if it breaks above 24, it will go long. And now it won't. Did it make a fresh low? Yep, now it made a fresh low. So it'll no longer go long at 24. But if it goes to 15, it will go long. Nope, just made a fresh low. It won't do it anymore. But if there is... Jesus. This vol is picking up. Look at these ranges. We went from 146. We went 100 points in 3 minutes. This ATR is nuts. This is, if there was a time to size down, if there was a time to maybe, instead of playing minis, start playing micros, we're moving. Even look at the SPY. We went from sub 673. We were at 7270. Up to 74, almost 20. We're just moving like no other right now. These movements are so big that it's mathematically, this is the time for you to size down, because if you're on the right side of the trend anyway, you're going to make enough money anyway. You know, you don't need to be swinging for the fences right now, because on the off chance you're wrong, and let's just even say you're only wrong 5% of the time, you don't want to take that bad beat that happens 1 in 20 times, and then all of a sudden you lose all of your accounts, or you take on a loss that you didn't want. It's the downside risk is not worth it, especially when you can get a considerable upside reward by sizing down still. You really can. What do I do if I only play micros already? Just play less micros. If you play 6 micros, play 3 micros. I don't know. You always have the opportunity to size down. Just wait for a trend. Nothing going to happen before 10 a.m. We try to get trending. Technically, this is a higher low.
Order submitted.
Dude, this
Target
slippage is
filled.
horrible right now. That should have been long at 07 and it got a fill at 14. The slippage is horrendous right now. That should have been in on this EMA recapture right here at 207, 208. It got a fill at 14. Holy crap. Holy crap, the slippage is bad today. But anyway, technically we did make these weird lows, but like, see how the SPY and the Qs went a little bit divergent from each other. The Qs made fresh lows at 942, while the SPY made a higher low. Both are making fresh highs right now. We are getting that 10-minute and the 15-minute Orbo break to the upside. At least we are on the SPY, and I think we technically did on the Qs. Yeah, we technically did. So 10-minute, 15-minute Orbo breaking to the upside on the SPY and the Qs. I see a Vago going. I see SPY taking some things out. My next target, if I were playing this in the short term, I'd be going to 6775, about 15 points above where we are right now. Of course, it might be a little bit of a fake out breakout, but I like how it basically accepted price at 6750. The market said that's a fair equilibrium. The bulls put in a higher low, and now we're seeing this follow through. My next target would be 6775, and then from there, I'd be within 5-10 point region of 6,800 as my next target, my next reach target. I'm doing something a little bit degenerate. I'm just holding these positions. My SPX is up 94%. I'm up 23,000 on that. My Avago is up 139%. I'm up roughly 14K on that. And then the one that's hurting me right now is VIX. I still have time, but I just really need this to puke. And I'm just very surprised it is not puking yet. Very surprised. Okay, this actually, I didn't even, oh no. I did not draw this properly. All right, we are testing the pre-market high right now. That little push right there was basically tying the 850 high. That's what this white box is on NQ for my Apex traders and everything. Those are good target levels. So if you scaled out a little bit there at 265, I don't mind that at all. We got a little bit of a test. The market loves to test the extended hours, basically the overnight and pre-market high and low. And that's literally what we just tapped. Literally what we just tapped. So let's zoom in on that. I wouldn't mind a dip here, a base, and then a retest, because that trade in itself would be enough profit that I could probably be done on the day. Mag 7 thus far, long and strong. I'm seeing mostly call buying for further dated, as in not tomorrow, and a little bit of put selling. And then going to the S&P 500, it's very jagged. Absurdly jagged. Okay. Puts are flat.
Orders target filled.
Shit. Calls were being bought, then sold, then bought, then sold, then bought again. So that's all over the map right there on the S&P 500. As you heard, the bot just hit again, currently up 500 on the day. Currently up 500 on the day. So I haven't done any manual trades. I probably should have taken this one. Basically, yeah, I should have taken that one. Fuck. That's a beautiful oh, what a beautiful trade that would have been. Is it going to give me a second opportunity? Is it going to give me a second opportunity here? I am jealous I'm not in. Well, I'd be knocked out for break even right now because I would have been in at 15 or something. Okay, how much do I want to risk on this one today?
Order submitted.
Slippage
Order
is horrible. Oh, where are we at? All right, the question is, do I want to risk 14 or do I want to risk 98? On a push of 50, here's my plan. I'm giving you my trade plan right now. On a push of 50, I will move the risk up to whatever, 14, 12, whatever this level is. And then on a follow through to 70, I'll move the stop to break
Order
even.
submitted.
All right, the bots
Target
just
filled.
hit again. All right, we push 50. I'm moving my risk up, just trying to de-risk. Technically, I'm still taking on risk, but remember, you just need one good trade to make your return. So as long as you keep your risk in check, you're going to be fine. Like I said, we hit that first level. That's what I liked. Maybe I want to move it up to 25 because that's only a 15-point risk. I don't necessarily just want this. That's not my real target. I just don't want to be focused on that right now. I want to be focused on moving my risk up. And if I can catch the runner, I can catch...
Order submitted.
Shit. Is it coming for me? Come on. Fuck, be a higher low. I'm looking at this low. I'm looking at this low. I want another higher low. Is it gonna knock me out? Come on, bounce. 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 If it does take out 42, I'll be able to move my risk up to 17. That's not much less risk off the table, but it is still risk off the table, and that is my goal.
Target filled.
All right, that hit again. I think. What is this high?
Target filled.
Nice. Those are up. The bot system is up 700. Come on. All right, currently taking on 20 points of risk. So my max risk is 20 points. So it's fuck. I was worried about this double top here. My current risk is about 20 points, aka $400. And for accounts that have $20,000 worth of buffer, a $400 risk I deem to be acceptable. I'm only trading one contract. Come on, get this break. Really, I'm looking for this break of 68. There's a lot of people trying to sell at 75. A lot of people trying to sell at 75. I'm watching that node, so hopefully we could take that out. It seems to be they're selling on the overshoot of this high that we saw at 948. It is 954. I'm attempting to be mindful of a potential 10 a.m. reversal, but we'll see. Come on. Come on. Take out 59.
Or target filled.
The bot's doing so much better than me today. The bot's up 800. Just take this out. Take out 70, 75. I just wanted to take out these. Oh, that's getting hit. There are buyers at 25, I just saw. But then there's these sellers at 75. Oh, that's a lot of sitting sell orders. But maybe there's going to be enough aggression to take them out. I see a lot of buyers down here at 200, 202. That's the point of control. Someone flash
Order
buying.
submitted.
Jesus, the bot's going nuts right now. There's just too much vol. It does make me a little uncomfortable because, like I said, it's
Order
running
submitted.
the code from yesterday and not
Target,
the updated
target
code.
filled.
But those are up. I mean, as you can see, they're up 850-ish. Come on. Freebie trade. I decided to take all risk off the table. The stop's at break even. So if it goes, it goes. If it gets rejected, it gets rejected. But fuck, it's coming for me anyway. Do I want to try to... Oh, I could take on 10 points of risk. That is probably a little bit more reasonable, but it did just break. The question is, do I take all risk off the... I feel like I should. I feel like as soon as you start questioning, should you be taking risk off the table, just move your stop to break even. It's a freebie trade. So right now, no risk. Obviously, the runner's up. There might be a rejection here at 300. We're fishing, folks. So I want to be clear. The bot is no longer in a position. It's locked in anywhere from 864 to 900. And then my manual trade of the bot, my stop's at break even. So I'm not risking money. And if it runs, I'm going for about 2K, roughly. If it runs, it runs. We'll see. I view trading to be a lot like fishing. You never know when you're going to catch the great white. It's all about throwing your lure in, get some good bait. And if you could just minimize the impact when you're wrong, that's why I moved the stop to break even. So it's a freebie trade. I'm either going to make 2K across 15 accounts. I'm either making $30,000 or I'm losing nothing. Those are the two scenarios, and I'm not in control. Of course, I would love to make it, and if I want on any serious dip, I could either I can move the stop up and guarantee some profit. If there's a severe rejection at 90, at 300, yeah, that's totally possible. In fact, I should probably check the options flow on it. So we have room to run, which is good for me, up to 775, so I'm not worried about an SPX rejection. The Mag 7 is still looking strong. As of now, it can change on a moment's notice, and SPX just got a pump too. So, oh fuck, as I say that, it's coming for me anyway. I can't really be so mad because if I was going to take profit, I would have been taking profit at 300 and it didn't hit 300, it hit 92. So I can't even do the woulda, coulda, shoulda thing. The bot's going to go long if we break out here.
Target filled.
Like I said, the bot's going to go long. Now we're up to 1,000 per account over there. I told you. And how did I know that? It's because I made the bot. It feels like I should move my risk up to that because no matter what, that would guarantee me $200. That's 45. Oh, is this going to hold? I like these trades because now, like, I could already feel my own anxiety going down because I want to clarify. My entry is where my stop is. So my worst case situation is being break even on the day. And if I wanted to, I could move it like a tick in my favor to pay off commissions. So like from now, like it's beautiful when you put your stop at break even. It truly is because there's no risk. There's like literally like all the weight
Order
just
submitted.
comes off. Jesus, the weight just comes
Target
off.
filled.
Dude, the bot is crushing me today. The bot is up 5K. And it's the shitty bot too. Oh, okay. Okay. So no matter what, I'm making $200. I'm making 10 points. I move my stop up. So no matter what, I'm either making 200 across 15 accounts. I'm either making 3K or I'm making 30,000. Those are the two current scenarios. Matt, sell your bot so I can make money. No, maybe one day. It's just like, I don't know. I don't know. There's various things to consider when you get into the game of selling bots, and I'm not necessarily against it, but I don't have plans to do it in the short term. I get more fulfillment and more joy out of teaching people how to make bots and getting into the nitty gritty math of it, of what's a good bot, what's
Target
a bad bot.
filled.
Dude, fuck me. I should just sell the bot to myself and stop manually trading. What the fuck am I doing? The bot can't stop making money today. You guys saw this at market open. These were at 0. Since then, I made 1.1K on 5 accounts. I'm up 5.5K. Well, I guess technically these are starting to look pretty good. I'm watching this battle at 300. I do need to be mindful of SPX at 75. I'm going to set an alert there because I don't want to be watching NQ when it gets rejected right here. I'm actually going to set an alert at 72 and at 75 because I do expect some sort of reaction there. Oh, wow. Oh, 85 is clearly... Folks, dingity, ding, ding, ding. This is your new trade alert. 85 is the level. I mean, is 75 even playing it? No. The market has shifted. The market has updated. 85 is it. Look at this. Someone threw on a giant call credit spread. Huge call credit spread. Jesus, that is a 98 percentile trade. We're talking 8.8 thousand contracts. We do now have support at 50. So this is the game. Are we holding 50 or are we breaking 85? This trade, when did it get, it had to get created. When did it get, It got created within the first 10 minutes. So sometime between 9:30 and 9:40, someone threw on this call credit spread. If you don't know what a call credit spread is, it's a neutral to bearish bet. If you are a sports bettor, it's equivalent to an under bet for total score. This play, this structure is betting that we end the day below 6,785. They don't care if it ends the day below by a cent or by $100, but it is a neutral to bearish bet, as in they think we will close out the day. So 4 p.m. hits, they bet we will be below 6,785. Once again, this is a call credit spread. Jesus. Yeah, they sold the 6,785 and they bought the 90. All right, we're going to see how that one plays out. How's my position? Oh shit, not looking good. It was looking good for a second. We just got double rejected at 300. Did it ever hit? No. Honestly, you could say, Matt, why didn't you take it there? But I would have never gotten a fill. I would have been off by a tick. I would have been complaining to all of you guys, how close was I? Because it hit 99.75. If it dumps here, I'm going to be a little bit fucked. But if it breaks out, I'm going to be pretty good. So I'm hoping for the recapture of 75, which is exactly on Bookmap. See, oh man, look at all those people trying to sell at 300.
Submitted.
Bots long again.
Target filled.
Bot hit again. Somewhat. It hit on some accounts, but not on other accounts. I am trading the same system independently. Oh shit. Why did some hit and others didn't? That always blows my mind. Like, how is that possible? Oh, that's not. So 3 of the 5 hit. You can see above my, or over here on the right side. 3, and it's the same system, just applied to different accounts. Dude, take out 76. If we can get above and hold above
Target
76,
filled.
there we go. So that locked in 1.2K per account. I'm looking for the breakout of 300. I'm moving my stop up. I don't know if I should. It feels early. But if we crack this again, that can't be good. All right, I'm moving it up a little bit more. So no matter what, I'm making 13 points, which I believe is $250. And hey, if I only make $250 today per account, that's 15 accounts. That's still a good chunk of change. That's a couple $1,000s. So I'm not going to be complaining about it. Obviously, I'd prefer this just rips and runs away and gives me my 30K, but you never know the next bar. You're in control of your risk management, and if it rips your profit target, that's a bonus. But I'm good. I do this every day, and I hope it helps you, but it's more so to keep my own mentality in check of you're in charge of your risk. That's what you can control. And right now, obviously, a lot of weight comes off your shoulders when you move it to break even. And when you're in profit, you're in profit. It's looking a little bit shaky here at 300, and who knows, maybe there's a big dip before the rip, or maybe this is where we turn. You just don't know. So hey, I'm willing to take this money. If it breaks that structure, it's probably not good, especially because now we're starting to see some lower highs here. So I'm hoping we don't make a lower low, and if we do, it's going to knock me out, but I'll make 250 per account, and if that's what I have to do on the day, that's what I have to do. Yep, it's going to be knocking me out. Ooh, is it going to save it? Am I going to get lucky today? It almost knocked me out.
Order filled.
And it knocked me out. Okay, there's my 200. So 200 across 15 accounts, that's 7.5K. And then on these other 5 accounts, that's another 5 to 6K. So the bots are doing better than I am. The bots are definitely doing better than I am. It is what it is. But this is why I got out, just in case this is a legit trend. So I was playing the succession of higher low, higher low, higher low, higher low, higher low. We got tide lows, and then all of a sudden we swept. So yeah, maybe it bounces back from here. That's totally possible. And at that point, you could argue, Matt, why didn't you keep your position? Well, first of all, I'd be red right now. And to go from that green to red, I'd probably be pissed off. But the other thing you have to consider is, what if it's a legit reversal? You just don't know. And when you don't know, you should be erring on the side of caution. Remember, mathematically, it's far different to have a big profit than to take a big loss. Mathematically, if you have an equivalent size profit and an equivalent size loss, the loss is a lot more detrimental to your account than the profit is beneficial to your account. So right here, am I stoked I got out? Yeah, I got out with a $200 profit. And right now I would be red to the tune of $600. So I'd be going from a nice profit, which like I said, my other target was 300, but we never hit it. Do you know how mad I would be right now? The fact that I was off by one tick and then it came all the way back down and I'd be red. No, that just messes with your mentality. I don't think it's a good situation. And guess what? It's only 10:06. Folks, this is that little 10 a.m. dump that we talk about a ton. It's just, I deeply believe I played that the right way. So if you're sitting there of like, well, why didn't you take the money? Because you don't know how far it's going to go. What if it went all the way up to my target and instead of making $500, I made $2,000? I would have 4x'd it. Like this idea of Monday morning quarterbacking, it's so brutal. Remember, you never know when things turn. As much as we are getting these 3 red bars right now, it could have just been 3 giant green bars. You just don't know. So just be careful. Whatever. If you want to critique me, but I'm confident enough in my system that in all reality, I don't care about other people's critiques. But when you're coming to critiquing yourself, ask yourself, are you even being a fair judge of your trades? And when I say, are you being a fair judge of your trades, what I'm specifically saying is, are you basing the judgment of getting in, getting out, risk management, downside protection, upside reward, are you basing it on current real-time information? If you're basing it on what happened after, you don't have that information. That's an unfair judge because you just would have never had no idea that happened. You can only base it on all the information you have up until that moment, not literally what occurs after. It's not how you do it. That if you're basing it on information that you're gaining afterwards, like what? That you're Monday morning quarterbacking. You're never going to get anywhere in your trading career because that's just an unfair comparison. What about your SPY call? I don't have SPY calls. So don't have to worry about those because they are non-existent. I think you're asking about my SPX calls, but remember, they are so deeply in the money that I'm just working on gaining intrinsic value. And if you ask me, I'm really waiting to see if this support will hold. It'll be a little bit different if we lose 50. It'll be a little bit different if we lose 30 for sure. But to me, we just got rejected at a weird level here, 68, 69. So I want to know if buyers are stepping in, but I would assume this is some call profit taking. Yeah, right there. Look at flow alert fired off at 9:59. We hit 10 a.m. 10 a.m. reversal came in. This is just par for course right here. Starting at 10:05, you have the 0 DTE call selling and 0 DTE put buying. Some bot system probably hit and executed all those trades. And the question is, where is the bottom going to be found? Is it going to be found here? And then we try to pump. If we do pump, how big is the pump? Is it only a little one? And then we vomit to the next level. Once again, that's base. We don't know yet. We have to kind of be patient and wait to see it play out. But what I can tell you happened is it was another run-of-the-mill 10 a.m. reversal, which as I was alluding to before when I was long on that trade, I was trying to be mindful of it because we've just been seeing it so many times. So that was another reason why I was willing to aggressively move my stop up and not take on any risk because we've just seen 10 a.m. reversals happen way, way too often. So just on the off chance that it was going to clip me, I obviously just didn't want to be involved. And now it's just bringing us to this trend line. I don't like the fact that we try to bounce for a minute and then we just crack that low on the SPY and the Qs. That does not make me feel warm and fuzzy inside. But if we start to recover above the 1007 right here, that's actually kind of an interesting dip buy opportunity. If we take out this 1007 high, because we might just bounce here. Not only is it the trend line support, but we're clearly at a key level. This is just a dip buy support. So you might be thinking, should I buy this? Well, the risk reward. Think about it in terms of risk reward. If you go long right now, your risk is 45. You are risking 45, 46. So it's about 5 points, 6.7 points. You're risking that low. Your reward is all the way up to the intraday high, potentially further. That's a good risk reward play. But remember, just because it's good risk reward play doesn't mean you bet your entire account on it because you probably have 50-50 odds. Yeah, maybe even 60-40 against you. So just because it has good risk reward doesn't mean you bet your whole account. Like More important than your trading strategy is your bet sizing methodology. Even with the best systems ever, you still need to get your bet controls, like your bet sizing in control. So even though I like this, and why do I like it? Well, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish. So just because I see that momentum, that makes me bullish. Yeah, of course, there could be another little sweep and maybe it's on the next one that's at buy. You just don't know, which is why you got to keep your risk in check, just because, okay, yeah, you like the risk reward, you're waiting for the pullback, you're playing the overall momentum. Great. I like it. I do. You might, I guess one argument is if you're looking at the options market, you might want to wait for the SPY to bounce a little bit more. I was going to say to bounce at all, but we did get a little nice bounce there. So you're literally playing the bounce off of 50. You have a 50-50 shot. Your risk is in control and your reward is a lot more. I don't know if this one individual trade, if this one individual data point will work out for you. But what I can tell you is if you're taking these types of setups time and time again, where you're trading with the overall trend, you wait for a pullback, you have minimal risk, you have a high reward. If you're only right even 1 in 3 times, 1 in 4 times, you will be net profitable, but you have to play it in a way to survive variance. And I know we're getting a little bit mathematical and like, what does that term mean? What does it not mean? Even here, if you're playing this breakout, you could use 46 as your risk. You could use 49 if you wanted to play it really tight. Obviously, that has a higher chance of you kind of getting swept out. And that's exactly why I'm saying waiting. Like I would like the break of the 1007 high. I kind of marked that out right here because I want to see if we bounce off this trend line. But what I should drive home is right here, whether we bounce or break, there is no model in the world that can possibly accurately predict it. Whether we bounce or break right now, every model in the world on this support and or resistance, however you want to look at it, it's 50-50, folks. I'm so sick and tired of people trying to be out there telling you like, I know it's going to bounce. I know it's going to break. No one knows. No one knows. It is a game of risk and reward, and you're just playing odds. It's just probabilities, and sometimes the high probability thing happens. Sometimes the low probability thing happens. To call this a bounce or a break, whether you're right or wrong, that would be as silly as you playing roulette, and you're like, no, I guarantee you it lands on green. You roll the wheel, it lands on green, and you're like, see, my model's right. Dude, that's one data point. That's one sample. That is not like a legitimate trading system whatsoever. So please be mindful of like the variance and the statistics and the noise, especially of intraday movements. The data itself gets a little bit more clean the larger your timeframes are. But when you're dealing with intraday timeframes, I'm talking the 500 tick, the 1 minute, the 5 minute, the 3 minute, it's indistinguishable from noise. It is 100% indistinguishable from noise. You said Matt's on the left. I hate it. Sorry. I'll move myself over here. My apologies. So right now we're a little bit choppy. And let's see which way it breaks. I have no idea which way it's going to break. All I can tell you is we pump, took a hit, 10 a.m. reversal. We just maybe broke down. We're showing the signs of a breakdown. We're watching that trend line right there. Intraday low is over here. Watching to see if this is a little fake out situation. Let's see. We're watching this little box right here, the low and the high. They tried to sweep it low. They broke it, but look at that. It popped right back in. Here's a look at the flow. Mag 7 is slightly drifting down, but overall it pumped up on the day. And the reason for that sweep right there was this drop in the S&P 500. You can see people sold some calls and they bought some 0 DTE puts. As of right now, well, I should say as of like 9:50, it's more of the 0 DTE flow moving the markets. And I do want to remind you that the flow is going to get even crazier tomorrow because of OPEX. It's going to get even crazier because of OPEX. Will Bitcoin hold 90,000? 50-50, folks. The game of prediction is stupid. You should be reacting to trend, reacting to options flow, reacting to certain risk reward setups. If you're trying to predict breakouts, breakdowns, will it hold this level? It's the wrong question. Like legitimately, not to pick on you, but will Bitcoin hold 90K? It is the wrong question. No, like you're asking a question that no one can definitively have the answer to. So what's the point of the question? The point of the question is you're either looking for your own bias or you're just asking people basically what their bias is, but no model can tell you that. And like literally to the point that you are flipping a coin. And the reason it's flipping a coin and the reason the odds are so bad is just because when we get to those levels, whether we bounce or break down is dependent on how everyone else trades it, the market in aggregate. And it's really in the short term just going to be some random, I guess, voting machine, as Charlie Munger would say. And you don't know what those players are going to do. Like, you don't know what the retail is going to do. You don't know what the leverage perp traders are going to do. You don't know what the hedge funds are going to do, the insurance funds, the market makers. When we get to these key levels, you're basically just waiting for the reaction. So in terms of will it hold this level? Will it break out? Will we beat earnings? This, that, like, it's just the wrong question. Those are all questions in the world of prediction. And if you're attempting to predict, you are already far behind what you need to do to be a profitable trader. If you're attempting to be a profitable trader, you are basically saying, where are the key levels? And then from there, you're trying to play minimal risk, high reward trades. And obviously with proper sizing and proper risk management, you're trying to ride the trend as long as you can. Like, that's what you're doing. Right here, no one can tell you with accuracy, will this break or will this bounce? We're just sitting here watching it and saying, okay, will it recover this zone? Will it take out that 1007 high? Is this a little sweep low? You don't know if the next guy is going to come in and buy $5 million of Nvidia calls and pop it up. You don't know if someone who is swinging it overnight is going to sell $5 million worth of Nvidia calls and drop the Mag 7. You don't know what other traders are going to do. So you basically just have to react. You cannot predict. Prediction does have a place in the market. And I know if you've been here before, you've heard me say this, but maybe for the new people, because we have quite a few more viewers, I'm not saying prediction is stupid. I'm saying prediction is stupid for short-term day trading, scalp trading, swing trading. Prediction is very useful for investing, but that's because you're giving it enough time for it to potentially play out. For example, a reasonable prediction might be, I think AI is going to be more popular in 5 years than it is right now. You are predicting an event maybe based on, I don't know, whatever. Oh, shit. Look at that pump. See? Who would have predicted that? Fucking no one. No one. You said no one knows, but that Nvidia guy buying 5 million knows. No, not in the short term. In the long term, they might know about political developments, this, that, the other thing. But once again, to know how something, the shorter the time frame, the more noise there is, which is a mathematical statement for just randomness. Like, truly in the short term, the market is random. And to help battle that randomness, that's why you're looking for the reaction to key levels where big money is. For example, these negative nodes, these positive nodes, this call credit spread, this psychological support. To help battle randomness, you identify the key levels and then you try to play it off of that level. That's what you're doing. That is what you are doing. Sorry for my hair not being perfect. My apologies for that one. That's on me. I should have taken more time doing my hair. So a little flush to the bottom, and then we just took out that high. So this seems like it was a bit of a bear trap in here. The movement from 1014 to 1017 seems like it was a brutal bear trap. Or who knows? Maybe this is a bull trap. I don't know. We broke above the high. But see how they try to flush this trend line between 1014 and 1016? I think a lot of people probably got into that, risking this recent high at 1012, and they're about to get blown to smithereens. I think they're about to get blown to smithereens, but maybe my prediction's wrong. All I can tell you is the 5 minute, 10 minute, 30 minutes bullish. 5 minute, 10 minute, 30 minute is bullish. That's all I can tell you. That's all I can tell you. My VIX position is fucking me. I was told always to short the VIX. I want my Mag 7 just picked up a little bit there. I like that. And price picked up there. Whoa. So Nvidia got a little bit of a pop. Avago didn't. Tesla's holding. Google got a little bit of a pop. Palantir got a little bit of a pop. Microsoft. So everything popped for about 3 to 4 minutes to bring us back into this. But it's not getting follow through. But something in the Mag 7 got a decent bounce right there. You could see the price bounce and options went up. Was it AMD? A little bit. Was it Apple? No. Was it Avago? No. Coin? A little. CoreWeave? Definitely not. Hood? No. Microsoft? No. MicroStrategy? Definitely not. Meta? No. Netflix? No. Nvidia got a little pop there. It did. So you had all this call buying, all this call selling, and now the calls are starting to turn back up for Nvidia. So that is probably what the Nasdaq and the SPY is reacting to, if I had to guess. Palantir, no. Tesla, kind of. Tesla's actually holding on very well. And Google too. So the flow on Tesla and Google is actually impressively bullish right now. It like legitimately is. But let's see if it is good enough to keep the party going. But Tesla is attempting to hold, Google's attempting to hold. So price is holding, and I would say they like are also looking pretty good. And Nvidia got a nice pump there too. So at this point, just to clean this up, sorry, I know there's a lot going on there. So let's mark out this recent high, and let's also mark out this recent low. But it seems to be getting to that part of the day where we had a nice trend up, brutal hit, and then it swept it low to screw over the bulls, swept it high or to screw over the bears, because then we pumped, and then this screwed over the bulls. So the question, which way are we going to go? We just made, on a short-term basis, a fresh high and a fresh low. So it's that magnet phone pattern, which is the worst pattern in my book. Higher highs and lower lows. So like, which way is shit breaking? Good morning. Happy Friday, Junior. As I call it, could you please check for the options low on Google? I locked in gains at the top of yesterday, then rebought with profits, riding the trend. Thank you. Yeah, I was actually, as I was just saying, it's actually looking crazy strong right now. Do you have a video on how to be a better day trader using reaction with key levels, how to maximize risk? Thank you, LT. Great. I don't think I have an independent video. Like, I'm trying to think of one that might be closest. Probably one of my psychology videos. But I could probably make a better one, a refined one. I would say if you watch any of my bad blow up videos, that might explain it. But it's more so that's like what we talk a lot about in the Goonie Discord. You could obviously ask some of the members in here before joining, and remember, your first month is free anyway. But that's a lot of the discussion. Like even yesterday, we had some quality discussions of like psychology, how it works, how it doesn't. And we were using the 5 minute and the 4 hour as an example of what's acceptable risk. But like, I mean, the main point I just want to drive home to all of you is this: that's all this game is. It's not being right on every trade. It's just when you get into a trade, even if you assume it's 50-50, the question is, where is your risk at? Like, just that's all it is. So like, eventually you're going to get so mentally beat up from losing that you're either going to blow out and quit trading, or you're going to be way too fucking stubborn the way I am, and eventually the market beats you into doing eventually what you have to do just because you need to do that for financial like survival, or you keep blowing out money. So for me, like you saw on that trade over here at 951 where I got knocked out. Even this, I'd be back in the green. But you know how much heat I would have had to take? I was long at 40. I would have had to take 90 points of heat, 80 points of heat. So I would have gone from plus 1,000 to down 1.6, and now it'd be break even again. That's not a good trade because this sell-off could have kept going. Now, arguably, I could have gone long at 21. To me, that's too much risk right now because I would have had to be risking 93. Obviously, it would have worked out, but I'm just waiting to see kind of like what this trend is and to see if I could get onto it. But like as a day trader and as a scalp trader, it does change a little bit for swing trading. It does change a lot of it for investing. But if you're a day trader, scalp trader, if you're using something like Apex, by the way, code Goonie, you have 4 days left. Same with Funded Futures Network, code Goonie. Those are two of the accounts I'm using right now. My Apex 1.2, 1.2, 1.2, 1.2, and then 200 on all of those. Great deal. 4 days left. Use that code Goonie. But if you're using those accounts, there's so much randomness. Like that's a big pump. That's a ton of money. And even if today ends up being absurdly bullish, you could have blown out on this drawdown. Probably many people did, even though today is still a bullish day. So sometimes you have to have a little bit of respect of how far we are going in shorter time frames, just because crazy shit can happen, even if it's like against the overall trend. So then it comes back to sizing. What is your risk management? And for me, you're getting into trouble, I would say. I know there's people who they kind of talk about it in a way of like, I don't use stops. I use mental stops. Dude, if you have the mental discipline to always stick to your stops, a huge congrats to you. But there are too many times where 9 times out of 10, I'm good. And I'm like, oh, that's my mental stop and I'm sticking to it, blah, 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 blah. And then there's other times where that 1 in 10 times where maybe my discipline's lacking a little bit or something crazy happens where all of a sudden I'm going past the risk that I thought I should take and I just get blown the fuck out. And so for me, and this is just my own psychology, my own brain, the best thing I can do is the second I get into a trade, set my risk and use every single ounce of my willpower to not move the risk further against me. I don't mind moving my risk up and higher and taking on less and less risk, but that's a personal battle, unfortunately. But for me, what I have to do is either go fully robotic and just completely automate it, or if I feel like I'm being disciplined, like I do somewhat today, my only other option at that point is literally just like, I mean, you saw it on the first trade. That's a great example of my risk was there. I moved it up. I moved it to break even. I moved it to in profit. And
Order
like just
submitted.
Oh shit, we're trading again.
Target filled.
Dude, these bots are fucking ripping today. The bots are loving the vol. I'm having a tough time trading it. Look at my manual trades. I make 200 and the bots are making 1.5. Crazy. The fucking bots are taking over the world. Bots are taking over the world. Bots are taking over the world, team. I wish I wouldn't have had the balls to take that. That's just too much risk. I wasn't, so I can't kick myself for that one. I can't kick myself for that one. I could have gone long there at 43. Even that, 43, 15 points of risk. That would be risking me going into the hole $100. That's fine. Going into the, like I said, it's a game of variance. You don't know which one the good trades are, the bad trades are. I wouldn't mind a little bit of another pullback to 30, honestly. Maybe a quick little kiss of these lows that I could get long into and then try to ride it all the way back up. I really wouldn't mind that. The question is the market going to be nice? Is it going to give me that opportunity? Or did I already miss this runaway train? Oh, that would be a nice long. Somewhere between 30 and 25 if we get a little bit of a dip there. A little bit of a dip. We might be rolling over a little bit here. We're going to be finding out. Obviously, I'm watching this 1025 low. The SPY's having an issue at it. The Qs are still holding. Nvidia's a little bit flat. Google's flat, but nicely trending up. Where's Avago? Avago, I need to set an alert there because I do have a live position and I don't want to be stupid about it. All right, we have some alerts on Avago. Where are we on VIX? So the VIX did sweep to the low 19s, got a little bit of a pop up. All right, I should probably be a bit more mindful of my VIX plays. Remove, yes. All right, we're watching to see which way.
Order submitted.
All right,
target filled.
Fuck me, dude. This bot is so much better than me. Wow, 1.5. These started off fresh today, so they're up 7.5 while my own trading is up 3K, and I'm trading 3x the amount of accounts. 5 accounts are up 1.5 each. 15 accounts are up 200 each. Jesus, dude. The bots are winning. Fuck me. I guess I could be done on the day. Had I applied the strategy to these other accounts, I'd already be good to go. Can you live off the bots? I don't know. They're still kind of in testing. Like I said, I'm actually running the old version right now. I made a new and improved version last night. I just didn't apply it. I was working on it during the Nvidia conference call last night. Would I run the current code like confidently live? No, maybe it is profitable, but I already can, like I said, I could think of various ways to already improve it. So I want to do that. Better trim them off for the 30%. No, because those are evals right now. I'm running them on evals, so there's no 30% rule on that. How do I get bots? You build them. I built mine. You build them, you build them, you build them. If you build them, they will come. If you build them, they will come. All right, we don't need the intraday low, but we might as well mark out the intraday fun for the ha-has and the hee-hees. Man, that drop, that 10 a.m. dump probably fucked over a lot of people. If you happen to get completely goosed in that move and then they trick you to trading it short right there, I feel for you. That's a dirty trick. That is a dirty trick. They dumped it, so if you're like me, they probably knocked you out, but then maybe on this break at 10:14, they might have tricked you to go short. If you got caught up in that, I feel for you. I legitimately feel for you. That was a dirty one. That was a dirty one. All right, we have the VIX marked out.
Order submitted.
Bot's going again. Why? Once again, that's too much risk. This is the issue with the current code, is it's taking on too much risk on some of these trades that I'm not a fan of. The newest version is better at that. The newest version is better. It should not be taking on. That's too far. 74 to 54. That's 20 points at 2 contracts. That's 800. It's too much. It might work. I'm not saying it's not going to work, but I'm just saying it's increasing the chances for a bad beat, and the newest version doesn't do it. I'm just hesitant to hot swap out the code right now while we're live. Maybe I'll swap it out during lunch or something. Maybe I'll swap it out during lunch. Come on, lock it in. It's targeting 78. Come on, lock it in.
Target filled.
Nice. 1.6K. Is it just scripts set up to execute, or do you spin up bots, machines to do trading? You just get an idea of what you mean. You could do both. That you could run bots on your own machine that are spun up in the cloud, or you could run it internally to some brokerages that allow you to run scripts. That doesn't define what a bot is. Like, I'm defining a bot as just a program, an algorithm that does the buying and selling for me. It does the evaluation based on the conditions that I give it. If this, then this. If this, then this. So it does that, the evaluation for me. And then if the conditions are hit, it'll either go long or short, or take the profits or take the loss. And then it does all that management for me. It's auto putting in the orders when the conditions are being met. All right, I want to double check if this, we just got hit there right at the start of the sell-off. We just ran into a double top right at 10:05 where the sell-off started. Same thing, SPY and Qs. Both of them got rejected pretty hard here. So the question is this setting up a cup and handle? Here's the cup. Are we forming the handle? Are we just getting this drawdown? And then boom, we get to go. Mag 7 is looking decent. SPY just took a bit of a hit.
Order submitted.
We're going to find out today. We're going to find out today. We're going fishing, folks. We're going fishing. Easy peasy lemon squeezies. If we break 81.25, this high that we just had at 10.32, if we break that high, I move my stop to break even, and then it's another freebie play. And I'm obviously just risking the zone in between the 50 EMA and the super trend. I could be a bit more aggressive about it if I wanted to, but really what I'm hoping is just that we can break above 81.25. Once again, this high right here before we had this sell-off, and then I just take all risk off the table. I just want another freebie play. If I wanted to, I could be more aggressive about it and just do it right now, which maybe that's the smart one. You know what? Fuck it. I am deviating a little bit from Icarus, the trading system that I've developed. I moved the stop too early because we didn't take out that high, but whatever, fuck it. It's a free play. I don't care. If I get knocked out for break even on 10 trades, but then the 9th trade's a runner, whatever. I had 9 trades that were nothing, and then the 10th trade where I made a bunch of money. I don't care. I care about the net situation. You shouldn't be caring about the individual trade of saying this trade has to make me money, because I find that those are the times where that trade is the one that loses you money and loses you a lot of money because you're holding on to a trade you shouldn't be holding on to. So whatever, stops break even. If it goes, it goes. If it doesn't, it doesn't. I would love for it to go. I'm still a human. I'm still a degenerate. I want it to go. If I had a magic wand, I would wave it and make it go all the way up there. But when I get into those particular psychological feedback loops, those are the times that I go on till and get fucking ripped. Here we go. Puts on QQQ. Blow out of proportion. Well, I have a feeling you're about to get blown out of your account because I am the luckiest trader to walk this side of the Mississippi. So if you're trying to fade me, sorry, brother. Sorry, brother. The one way you could fade me is if I get knocked out. That's probably a perfect buy opportunity. All right, so we took that out. Great. Obviously, now I care about the intraday high at 300. Technically, that's a tick above. Our intraday high is 99.75. How's the book map looking? Yeah, you can see right here. This is going to be some serious resistance. They're trying to dump, as of right now, passive sitting orders, and who knows if people are going to market order. There's 100 contracts trying to get dumped at 300. That's clear resistance, technical level, psychological level, important level. So I'm hoping we just fucking rip, dude. I'm hoping they just ground and pound those pussies. I'm hoping hey, look at my own trading has almost tied my bot trading. Who's going to be better? Matt the person or Matt the machine? Matt versus machine. Matt versus machine versus madness. Will Matt be a better trader taking on his machine before he devolves into madness? That's the question. Who wins? Matt, machine, or madness? Those are your 3 options. Who is the winner? Who is the winner? Matt, the machine, or the madness? Matt was born with freckles in the shape of a 4-leaf clover. Matt is not Irish enough for that. I don't think I'm Irish at all. Matt versus the machine versus the market versus madness. I feel like one day we're all just kind of spiraling into legitimate madness, you know? All right, well, we took out 300. This, I should clarify, this level of 45 all the way up here, there's really nothing that special about it. It's just where I make $2,000 on a day. So I'm capping myself, but I might get out earlier. I just want to know where my max run is too, because of various consistency rules, but this dip is not fun. Hopefully we could put in a higher low. I'm waiting for the next higher low to move my stop up to, as I did before, and hopefully it goes. But I was expecting a rejection at 300 because, as I showed you, there was a ton of people selling at 300. So now I'm looking to see if it can recover. If it can recover, if we can take out 310, then I'll just move my stop up to whatever this recent swing low is. And I just want to play the succession of higher lows. But I want to clarify, I am not risking anything. My stop is break even. And the reason I drive this home every time is because I find a lot of people would improve their own trading if they did a similar methodology. Take your risk off the table. It's one thing if you leave some money on the table, but it's silly to be leaving money on the table and then it goes so against you that you would have lost money. Like, you just, whenever you think it can't get worse, as a person who's thought that a lot and who's traded that way a lot, I promise you it can get worse. So when it starts to go in your favor, as it has here, stop to break even. Stop to break even. Where are we at? Avago's looking good. Oh, wait. Should we move it to the 5 minute maybe? 5 minute, 5 minute, 5 minute. Nvidia's not doing anything, folks. Should we put up Google? Google's going. Avago. Avago. All right, we're watching that swing low. We don't really need this. We don't really need that. We're watching this swing low. We don't really need that. We don't really need that. Fuck, is it coming for me? Lower high, rejected at 300. I finally ready to take my day trading serious. I only want to trade SPY and QQQ, SPX, knowing nothing. What should I do first, second, and third, etc.? How do you have a video happen series cover these? Not exactly like that, but what should you do? You should not trade real money. To be completely honest, trade with a paper account, as in not real money, and develop an actual system. People think, oh, I trade, and then when you ask them how do they trade, it ends up being nothing more than just random ass gut feel. And that's the perfect way for you to lose money. I think there's too many people putting this pressure on themselves that they have to be trading real money right away. And it's something concept of like, oh, but if I don't, I'm like missing out on money. You're not missing out on money. If you rush trading, like, you're gonna just lose money. Even doing exactly what you should be doing, you should be mentally prepared to lose money. So to help alleviate that at a little bit, at least, what you could do, hang on, I'm just wondering if I should be moving this up right about now. I'm looking for it to take out 86. Avago just took out the intraday high. I would say step 1, step 2, and step 3 are trade on a paper trading account, i.e. not real money, and develop an actual system. And when I say an actual system, I mean clear, well-defined entry criteria, clear, well-defined exit criteria, and do that on your paper trading account to do 2 things. 1, prove to yourself that you have the discipline to follow the system, and 2, to see if your system is even net profitable or not. And then when you're confident that you've passed those 2, then you can transition either to a SIMDA funded account or to your own funded account. But understand, maybe take it slow at first, because there is an extra aspect of like just emotional battle when you're starting to play with real money. All right, I don't like this structure, so that's why I moved my stop up, just in case it pukes out. I figure, why not, for this work, lock in another $200 to bring myself to $400 on the day. Fuck. I don't like it. I don't like the succession of lower highs. Maybe I get lucky and this is the swing low. I'd feel more comfortable about that if it retakes out 300. But regardless, if it sweeps it, I'm 12 points in the money. So that'll put me up 400 on the day across all 15 accounts. So we'll see. We'll see. I don't know the next bar. The next bar could be a giant green bar. It could be a giant red bar. I'm protecting myself just in case it's a giant red bar. And if I get lucky and it's a giant green bar, I have my profit target up there. So just remind yourself you're in control what you're in control of. But coming back to your thing, Lenny, step 1, open up a paper trading account. Step
Order
2,
submitted.
Oh, bots are live. Off by a tick. One tick, Nick.
Target filled.
Locked it in. They're up 1,700 each in one day. That's disgusting. When people start trading, I think they get all go-hung of like, oh, I'm going to be a serious trader. And then they don't do what serious traders do. They think they can spend all this time just watching charts and like, if I just fucking sit here and I watch this chart, I'm going to learn how to trade. No, most serious traders, most actual traders, what they're doing is just a lot of data analysis. And before you bitch and moan of, I don't know how to do it, dude, AI makes it so simple now. Just throw in data, throw in your trading strategy and ask like, okay, what do you see here? Like the world of data analytics has become so incredibly simple now because of AI. I find too many people want to trade, but they think they know trading is like systematic risk reward management. But then when it comes to their own actual trading, all of a sudden they just start doing like random ass shit where they don't know if they're getting in and have positive expected value or negative expected value or anything like that. So step 1 is to open a paper trading account. Do not risk anything. Step 2 is start to working on a system. A system is defined as clear-cut entry criteria, clear-cut exit criteria. When I say clear-cut, I mean you should be able to explain your system to me, your exact system. You and I should be able to trade in 2 different rooms all day, trading your system. And at the end of the day, we should come back and have the exact same entry and the exact same exits. That's how well-defined a system is. If it is not that well-defined, you are not trading a system. You are trading with discretion. You are trading with your gut. That is not a trading system. Once again, for it to be well-defined, you should be able to explain it to me. We should be able to trade independently all day. And at the end of the day, we should have the exact same trades. And then from there, the chance of you having a profitable system at first is slim to fucking none, borderline impossible. So step 3, 4, 5, 6, 7, 8, 9, and 10 are refining your system. And then eventually you're going to be like, hey man, this has actually been net profitable for a while. I've had the discipline to properly follow it. Or maybe you just go fully automatic and just let that trade and trade and trade. Oh, I hate this trade. It went long at 99. Dude, if this gets rejected at 300, the bot's going to get fucked. I hate this trade. No bot. I hate it. And it's already beyond its own risk. This is the issue of the first, of running the previous version and not the new version. Maybe it gets lucky.
Filled.
Oh, I did get knocked out. Something got knocked and I didn't know what it was. So now I'm up 400 on those. I hate that trade. I mean, literally I called it out before it happened. That's just a key level. You don't know how the market's going to react. And granted, you can be like, maybe it goes a point or two in your favor. I fucking hate that. Hang on. What's going on with options? I hate that trade. But it's even things like that you start to notice it. So like right there, you think, okay, cool. I saw that in live trading. How can I improve it? Like that's a very fair question. You're like, okay, cool. This is like one potential improvement. So then you go back and you improve it and then you let it run. So someone just dumped options on it. That's part of the issue. Do I want to re-enter here? It's a little bit too much risk. A little bit too much risk. 20 points of risk. If it pops, do I take it? That's 400. 20 points is 400. So it would put me back at break even on the day. That's fine. It's basically on an account level, a freebie trade. I'll put in a pending order if it hits. It's not in a position right now. I'm wondering how much this delta bleed is really gonna, how much damage it's gonna do. But I have in a pending order if it starts to bounce. But it is, to be clear, it is not filled yet. What a fucking horrible fill on that bot. I knew it was dog shit too. Something. We're at that low. Avago did make a fresh high. All right, it's going down too much. I'm pulling my pending order. I don't want that in there anymore. I canceled it. What I did where can I show you? Maybe the 1 minute. I had an order on the reverse of 50 here. I was like, okay, like maybe we're just coming down. I saw that this was the pre-market high right at this point. So I was like, okay, maybe we bounce off of 64. So I had the pending order for 80, risking 62. So it was risking about 18 points, but obviously it never bounced up. So I never got the fill. And this was just a clear-cut rejection at 300, which for whatever reason is where the bot went long. And like I said, I mean, literally when it got in, I told you guys I hated it. And I want to be on. I don't even think my newest version would have stopped that. So that's even an improvement for me. So right there, VIX jumped to 20. Did it? Wow. Well, hey, okay. I thought we were in the low 19s. A jump from 19.75 to 20 is not that big of a deal. I thought we were hanging out in the low. Hang on. Let me mark that out. Let me mark this out. Let me mark this out. Let me mark this out. So I would be, one thing you could do is a 50% pullback, which is pretty much where we're at right now. You could watch. So obviously we had this pump. So we've overshot the 50% pullback, which is this little white dash line on the S&P 500. And we overshot it on the Qs. I'm wondering if we can recapture the 50% pullback. And also you can watch this upsloping trend line to see if we hold this generic. But if we get to the point of testing it, that would actually be kind of extreme on this. All right. So basically the low of this 1045 bar, I'm watching that because we're right at the 50% retracement. This pump from 1015 to 1035, the 50% retracement was right there. That's what we're at. Generally, when you have big moves like this, there are many bots who are playing those retracements. So let's see if that 50% retracement holds or not. Let's see if it holds. And I'm just looking at that high from 1015 to 1035, basically the extreme of this pump. Basically the extreme of the pump. Which means in reality, we don't need that. Just trying to clean it up a little bit. Sometimes I have too much going on in the chart. I wouldn't mind the recapture of this 5-minute high. Avago's holding on fine. Google's holding on fine. Nvidia took a little bit of a hit, which is probably what we saw. Mag 7 slightly tilting down. S&P 500, someone took a hit at 1045 right here. It was, once again, 0 DTE call selling and 0 DTE put buying. So removing positive delta and adding negative delta. So when you remove positive and add negative, that has 2x the effect, and that's what happens to price. So the delta just took a clear hit between 1040 and now, but hopefully it's just a momentary system that ends and then we could start to recover. The Mag 7 is holding on pretty well. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours trying to stay bullish. 5 minute, it is bullish, but it's going to be testing here 20 points south. 10 minutes bullish, 30 minutes bullish, and 4 hours trying to hold bullish. So the first thing I'm watching is maybe this bounce off of, it's about 17 points below us, right off of 200. So maybe the NQ contract right there. And then for the ES to do the equivalent, we would be back at that 1010 low, which would bring into question this upsloping trend line and also this whole pump range. But it seems like the culprit is over here. It seems like the culprit is NVDA, and we definitely don't need this anymore. So if you're looking at SPX, we just double topped at 70. Hopefully we can stay above this low at 43, but let's see if we can find support at 50, key technical level, key psychological level, key gamma level. I do not know if we will or won't, just like before. When you get these sweeps, you don't know if the sellers will continue and press it down, or like this case, if you're going to bounce again. All you could do is pay attention. All you can possibly do is just watch exactly where the key levels are. Matt, could you code in a way for your bots to scale down size after certain times, full size? Yeah, you could do literally whatever you want. It's just coding. You could code it up to literally do anything, man. Fighting the PDH right now. What is PDH? What the hell is PDH? What would PDH stand for? I don't know. What the fuck's PDH? Enlighten us. What is PDH? PDH. I am unsure of that trading acronym. PDH. PDH. What in the world would that be? Previous day's high. Oh, yeah, that's this green dash line. Yeah, so they both came down to it. So as in not yesterday, though, to clarify, not Wednesday's high. Wait, unless it is. I have something marked out. No, that it's the high from not Wednesday, not Tuesday. It's the Monday high and low. So it would be PPDH, the previous day's high, if we're going to be accurate. The PPDH. All right, we're coming up to that trend line again. We're coming to the swing low. We're coming up to these like kind of just key levels. Overall, it's kind of range bound, which is crazy to say because I know we've been moving a lot, but like overall, we just double topped, we've double bottomed. We haven't really broken the overall intraday like zone yet. And I know it's crazy just because these moves are big moves, but technically that's a double top. Technically that's a double bottom. Nvidia is looking a little weak. Hopefully it's a triple bottom, but the fact that we've had consecutive lower highs does not make me feel the best. We opened up lower high, and now we're pressing on its third one. So yeah, maybe buyer step in right here, but like I said, does not necessarily make me feel the best. So I'm hoping we bounce, but once again, hope doesn't really get you that far in this particular game. And also, this is a pretty good example of why I got out at that slight gain. So I put it 10 points in my favor. So I've done that now twice today. So cool. 10 and 10. Awesome. Awesome. I try to give myself a chance for a very large gain. It's just the breakout never came. I got in a little bit earlier. It went up. And when you come to a key level, you're either breaking or you're getting rejected. It got rejected. I protected my downside. If I stayed in the play, my trades would be destroyed right now. That's why you do it, because you never know. You give yourself the fighting shot of maybe something good happening, but you have to be prepared for the worst. So basically twice today, even though I haven't had that like killer run of it, like, oh, wow, like that's that big gain and it keeps going. Well, no, it didn't happen because we haven't had that big breakout or the big breakdown. It got rejected. I protected myself and the accounts are still in the green. Sick. I think that's the exact way to play it. I do. Mag 7 tilting a little bit since 1048, but nothing crazy. S&P 500 is the major culprit. Started to get hit at 1040, really started to get hit at 1046. We just hit a fresh delta low. Calls are being sold, puts are being bought. For this to bounce, that would have to stop. For it to continue, well, you'd want that trend to obviously continue. I'm waiting. I might have had, no, don't mind that alert because technically the bar is not closed yet, so I'm waiting. But we've basically full trip this. Full trip up, full trip down, full trip up, full trip down. This is choppy range-bound trading, folks. And it sucks because the range is very, very large. I'm not saying by any means it is easy, but this is a tough one. This is very much a tough one. My bias is bullish because guess what? Bullish. Guess what? Bullish. Now, if the 10 breaks, questionable. 30-minute breaks definitely then have to be on the bearish side of things. I'm a little bit nervous about this 5-minute right here, which is why I care about the recovery. I want it to stay above the cloud. I want it to stay above the 50 EMA. And even on the ES, it's getting a little bit questionable. Granted, the 5-minute changes pretty rapidly, so I do care a little bit more about the 10-minute. But obviously, if the 10-minute breaks down, that first means that the 5-minute broke down. So that's why I'm kind of watching these recent extremes. And then what I'll do, instead of putting it on ES and NQ, we could just watch it on SPY and QQQ. So seems like this is kind of an important decision point right here. Do we recapture? Is this a triple bottom or are we actually about to break down? Do we, once again, recapture 50? Do we take out this high? Your risk is minimal. You might be able to ride it all the way back up. But right now, it's either a double bottom breakdown or it's a triple bottom and we bounce and then go up and start to question, is it a triple top or is it a breakdown? Like, it's a huge range. It is very frustrating to trade this, obviously. I don't need that anymore because it looks bullish. It looks bearish. It looks bullish. It looks bearish. And because you, in my opinion, your base assumption should be that it's always going to be shitty trading like this, because then that gets you in the mindset of always protecting your account rather than assuming we're going to start magically trending in the way that you need it. Long shot, but gap fill maybe? Which gap? There's gaps to the upside. There's gaps to the downside. I have no idea what you're talking about. Well, I know what you're talking about, but I'm just saying there's a gap to the upside and a gap to the downside. And fuck, we might be like equidistant between the two. That's not true. We were equidistant when we pumped all the way up. At the intraday high, we were equally far away from the upside and the downside gap fill. Below? Why below? Why is that more statistically relevant? Are you maybe just biased because of the recent price action? Would you have argued for the upside gap fill if you were looking at the charts to 1035? All right, we just cracked the intraday low. which means the 5-minute is attempting to push bearish. The 5-minute did push bearish on NQ, and the 10 minutes testing. Obviously, you'll be a little bit more informed when a bit more time passes. We're going lower. I hate when people try to say that. You don't know. No one fucking knows, dude. Like, I'm so sick and tired of people thinking they can predict. Seriously, Rick, that's a stupid fucking comment. We're going lower. There's too many people that think having that type of bias is a good thing in the market. And it tells me that you think you can predict this, which means you're inherently not going to be respecting your risk. It's the dumbest fucking thing to do. It is so fucking dumb, dude. I don't understand how so many people can continually be losing at trading. Losing. And then they're like, yeah, but I'm still going to keep predicting. It's like, where the fuck's that getting you? Your account is going down and down and down, and yet you still think like it's appropriate to try to predict this stuff? Like, it's so fucking dumb, dude. Bro, read my comments. Yeah, Q3 GDP release will be rescheduled. BEA. Okay. So you think your interpretation of the news is like the end all be all gospel? Like, there's too many people with too much hubris and ego. You are trying to map over your interpretation of news to what it will do to price. That is the dumbest fucking thing ever. No person on this planet ever has been able to pull that off. Ever. And you think here in YouTube chat that you're the one guy that's figured this out in like the history of mankind? You're the person who's figured out the interpretation of news and what that's going to do to the market? You're not, dude. You're not. And I know you're not, because if you could, you'd be a multi-billionaire and you wouldn't fucking be in here. You wouldn't be chit-chatting with us. You'd be doing something else with your life. So literally by the fact, well, first of all, like just any basic understanding of math would tell you can't do it, but Jesus, like it just so like I see it time and time again, and I get caught up doing it. I'm like, okay, this seems bullish to me, this seems bearish to me, and half the time you're right and half the time you're wrong. And people only like, our brains anchor on to the time that we were right because it does happen half the time, and you're like, well, hang on, I was right, so this should work. But it's just poor math. It's like legitimately poor math, because our brains remember the times we were right, the times we were wrong. We have this like cognitive dissonance, and then all of a sudden, like, you just keep trading it, and you get destroyed. Like, well, he was right. How do you know he's right, dude? We've been talking for 5 minutes. Even that he's right. Oh, you're judging someone being right because of a 5-minute movement. So you think that the movement between 10:55 and 11 is then indicative of what we do for the remainder of the day? Obviously it isn't, and I'm asking it as if it's a question to try to like illustrate the point of how silly it is. Yes, maybe we sell off. Yes, maybe it's a downside gap fill. But you know what also could happen today? We could bottom right here, turn of the hour. These bots could stop destroying the S&P 500, which they actually are already showing bottoming, and then we could recover from here and rip and push new intraday highs. That could also happen. But I find too many people are just getting married to their bias and their thesis, and what that causes you to do is basically blow out your risk tolerance, and you take on too much size and too much risk. Like, Jesus Christ. Like, it's just, if you guys who are saying this right now keep on this path, you will never be profitable. And I know you won't be profitable. And it's not because you won't have a lack of gains. You will make big gains half the time. Your issue is that one of these days there's going to be a bad beat, and you're going to have way too much of a strong bias, and you're going to refuse to admit you were wrong. That is what will happen. You will blow the fuck out, because like, as much as you can be right, if you're always being that just like, I guess, dogmatic in your beliefs and your bias, it only takes one bad beat, and it's just all gone. And this is coming from a person who I'm sure I've done that multiple times in the past, but like this idea that like, oh, nope, this has to go down. Oh, nope, this has to go up. You have to get rid of that hubris. You have to get rid of that ego. You have to say, okay, right now we swept that lows. I see this breakdown. Maybe it's questionably bearish. Maybe you want to chase it. And if you do chase it to the downside, great. Move your risk. Like, just go as maybe you caught a new trend. Maybe you did. Maybe. I have no fucking clue. And you have to admit what you do know and what you don't know. For me, the fact that the 10-minute and the 30-minute are still bullish tells me I'd be more interested in buying a dip if we start to dip. or dip and then bounce, obviously. If we don't bounce, okay, I just never took the trade. Like, so I never got in. So like I didn't have to like sweat anything. And if you want to chase it to the downside, yeah, maybe you're right. I have no clue. If it goes a bit in your favor, move your stop to break even, and maybe you caught a waterfall. But this idea that like all of a sudden you just fucking know, it's so stupid. It's so stupid. And maybe you think I'm right or wrong, but I would say look at the scoreboard, aka your P&L, and I bet you if you're trading with that methodology, you are not net profitable on any serious amount of time. If you are trading with that methodology over the past 1 year, 3 years, 5 years, I would bet you my net worth, you are not profitable. Can you check TELUS stock? Looking for a good entry point on dividend long term. If it's long term, you just dollar cost average. You don't really need to time it that much if it's long term, especially if you care about dividends. People say going down because it's easier to type that. I think it's going down, has a higher EV at this moment because of the time frame with this risk reward. Well, that would also just be wrong because I just pointed out how the 10-minute and the 30-minute are still bullish. So you'd be on the wrong side of any intraday time frame. And even if you might be thinking that way, but most retail traders like legitimately just saw the last bar and they're like, oh, I guess we're going down. This might be the bottom, or this might be a little breather that gets absolutely fucking destroyed. I don't know. All I can tell you is, guess what? We came to support. When you come to support, you pay attention for the breakout, you pay attention to breakdown. If you want to be bullish, okay, on any reasonable recovery, you try to go long, you risk the recent low. If you want to be bearish, okay, on the dead cat bounce, you short it and you risk the recent high. You don't need to overcomplicate it. If you legitimately think this is going down, your entry just happened. It happened on this breakdown and your risk, you got in at 32 and your risk, why is this not working? Your risk is 36. You're risking 4 points and your first target is 700, maybe 705. That's the setup. If you happen to be bearish, I'm not saying you should. I wouldn't take that trade because once again, it is going against the 30-minute on both NQ and ES, and even ES hasn't necessarily broken down there, but whatever. Maybe that's not how you look at the market. And even because I don't look at the market, I'm not saying that this is impossible, but what I would prefer to do is see if it bounces because my overall bias is bullish. So what I would care to do is take out the recent high. I care about the push above 36. And whatever the recent low is at that point in time, and maybe it changes, but on that takeout, I risk the recent low. That's it. Like, you're just betting either on a trend reversal or a trend continuation. But the key fact is that you're keeping your risk in control and minimum in the off case you are wrong, and you're going to be wrong 50% of the time. So if half the time you're wrong, your goal in that half of the time is to clearly minimize risk. So at the extreme, you want to take on acceptable risk. And when it goes a bit in your favor, probably you should be moving your stop to break even. I don't know which way this is going to go. And no one on this planet could tell you which way it's going to go. I can understand if you took this breakdown short at 1107, I get it. Your risk should be 36. And right now, as we are starting to sweep low, you should really start to consider moving that stop to break even. On the flip side, if you're bullish, you're looking for some sort of bounce, some sort of higher low, higher high. You take that out, your risk is a recent low, and then maybe you're right on that. But if I took this short, which as I explained, the short was right here, this breakdown, at this point, my stop's at break even. I'm 5 points in the money on ES. That's $250. I'm taking on no risk. If it pukes, great. On this one, because the 30-minute is so strong, I would be really aggressive of that stop movement just in case we get a bounce off the 50 EMA on ES, but more specifically NQ. What's going in your favor is the 5-minute broke down. The 10-minute in 8 seconds will officially have broken down. Yeah, right here, 5 seconds officially broken down. Sometimes you see these fake outs. If you have a bit more leverage, recovery of 63 is pretty bullish. A recovery of 100 and whatever the fuck this is also pretty bullish, 165. That's how you look at it. Right here. Cool. If you took this trade, like I said, you're in at 32. Your risk, I'd move my stop to break even, as I showed you, and you move on with your life. And your first target is probably within 5 points of this. And maybe it keeps going. Maybe it does, maybe it doesn't. There is a downside gap fill to 89. Maybe that's your ultimate target. That's completely acceptable. Completely acceptable. Actually, on Avago, do I want to manage my Avago play? I kind of do, because I don't want to have to ride this if there is a downside gap fill, but I do have time. Mag 7 trending down. It's not vomiting. What's vomiting is the S&P 500 right here. It was looking good, got hit, recovered, but the train went off the tracks at 10:45. Right here, you can see the delta getting basically clobbered. Basically clobbered. Oh, I want to see the retest of 30 and see how the market behaves to that. Be careful. There is negative gamma beneath. You do have this node at 30. Well, that is not right at all. How does this change? Okay. So 15 is now become a node. 715 is now a node. If you're trading SPX, be mindful of that. And then below that, you have 6,700. So you could watch 15 here. It's a little bit below where we are, right about there, roughly. I kind of want to see this retest. If that fails, you could target 15. But would you chase now? No, because your risk is too far away. You want to get in when your risk is minimal. There's one thing you take away from my trading or this show or anything in a general sense. It's minimize your risk. Minimize it. We love you. The downside gap was just a potential suggestion play. I mean, there's a million fucking suggestion plays. That's the point, is these are all just probabilities. You don't know. Dude, you are really fucking missing the point. Anything like has potential happening. That doesn't mean it has the same odds of happening, but dude, this SPX, what the fuck? Are we going to that 15 level? Oh, is it going for this fucking downside gap fill today? If it is, I should probably lock in some of my profits. All right, done there. Locking in some of these profits. The Qs are going for their downside gap fill. This will give me an opportunity. If we do hit it and start to bounce, I'll be able to pick better strikes at better expiration dates, because I've been carrying some of these current positions for a hot minute. What is today? Today's the 20th. Today is the 20th. Jesus, dude. Why is it getting so fucking clobbered right now? Well, I know why. Right here. Just waiting for that to potentially end. Potential. Where is it? Damn. They're goosing it. From a swing perspective, intraday, obviously it's brutal, but from a swing perspective, I kind of don't mind, if I'm being completely honest. From a swing perspective, if they can clean this chart up, get it, and then they start to bounce it back today, that means on this push to 829, no one has to worry about the downside gap fill. So in terms of like an ideal swing play, dude, if we hit this downside gap fill, bounce off the 50 EMA and bounce into close, maybe we get back up to, I don't know, 725, 730, 740, something like that. That really, I know it's brutal right now, but it cleans up the chart, only leaving the upside gap fill. So I don't hate it. I really don't. I don't. And obviously, if you're playing it to the downside, we still have some distance to go. Once again, the downside gap fill. We're at that next key gamma level that we were kind of talking about right here, 15. 700 is there. Downside gap fill is 90. And then the start of the transition zone is 75. I would prefer that it bounces like right off of that and recovers above 700. The longer it's below 700, the more concerned I would be. So I would, like I said, from a swing perspective, I know intraday, if you're bullish, this is brutal. But from a swing perspective, if we can just quickly kiss 89, bounce, recover, maybe chop around and then push 30 or 50 for close, That's actually a nice swing setup to play that upside gap fill. That's a nice swing setup. Obviously, quite a bit of a reach, like woulda, coulda, shoulda, like you don't know if it's going to go or not. But the Qs just got their downside gap fill right here. NDX just took out its. QQQ just took out its. The Russell, we don't really have to too much worry about the Russell. The Russell got its downside gap fill. So the last thing is the SPY. The SPY has a downside gap fill at 667.34. SPX has a downside gap fill at 6689.75. So I would be watching that. If you are playing this downward movement, you would either want to take all of your profits or at least scale out some there just because it could bounce. Obviously, if it keeps going, maybe you want some to ride. But if anything, just be careful on that potential bounce from that moment because it might just be a chart cleanup leading to like an OPEX push for tomorrow. But what's crazy about it is how bad that delta flows. And it all started at 10:45 at a weird hour 15 into the day. You have all this, well, a little bit of call selling, but it's a lot of zero DTE put buying. This tells me the fact that it is the light blue line, I would interpret this as these are short-term players, as in for today, specifically identifying that downside gap fill. That's what I'm seeing here. They started to get it a little bit this morning at 10, and then they really started pushing it at 10:40. I wouldn't be so surprised if you see this light blue line on the downside gap fill, or maybe at 6,700. Just at that point, say, okay, cool, like we're going for it, and they then take their profits on the gap fill. The Q's already got theirs. Nvidia's getting hit. Avaga's getting hit. Wow, what a fucking puke. Had I held either of my initial positions, I think Matt owes that guy who said it was going down an apology. No, I don't. What the fuck are you talking about? Dude, some like people are honestly too fucking stupid to understand this. If you randomly have a call out any day, you're going to be right half the time. That doesn't mean that's how you should trade. That's the, like, dude, I swear, like a lot of you come at me because you're like, oh man, you're ranting. We've already heard this. But the reason I have to continue to say the same thing over and over again is because there's too many stupid fucking people who can't understand it. I.e. right here, unfounded warrior. You literally missed the entire fucking point of what I was saying. The entire fucking point of what I was saying. And that's why, unfortunately, I have to keep ranting and keep reiterating because there's people who are too fucking dense to understand like basic mathematical concepts of like, you really think judging a play on how it played out, even if it was stupid, that would be as dumb as someone comes up to the roulette table and like, hey, I bet it hits green. And then it hits green. Are you saying that that guy then has a good model? And you're like, oh, I guess we just always bet on green. Like, holy fuck, people. Like, you have to understand this is just a game of probabilities and statistics. And whenever you are certain, whenever you're like, nope, this has to happen, that is when you are getting in trouble. Jesus fucking Christ. Like, to all my viewers who have heard me say this before and you're getting like tired of it, dude, I am there with you. I'm getting tired of it. I wish the average fucking person that chimes in with those stupid ass comments wasn't so stupid. I get tired of reiterating it. But like, unfortunately, we're seeing it every single fucking day where there's people who come out of the fucking woodwork just to try to like, I guess, show us how fucking dumb they are. And they astound on a daily fucking basis that like, this is, you know, this gets political, but you know how like right now there's like a big argument of like, should we be defunding the Department of Education? Like, what's going on there? Like Trump's argument with it. Dude, what has the Department of Education ever gotten us? Like, seriously, like we are so, as the world's leading power, our education is like legitimately non-fucking existent. Non-fucking existent. It blows my mind. Blows my fucking mind that people, yeah, like let's just keep giving that shithole money time and time again. We're at 700. I expect a temporary bounce here. If we do directly bounce off of it, that would actually, in my book, make it very difficult, like extraordinarily difficult to get this close to the gap fill, but not get the gap fill. life will be easier if we just right away get the gap fill. Like legitimately, you want the gap fill. You don't want it to get this close and be like, nah, we're going to return. So I would actually really, really hate this setup if we just pop from here. I would much prefer we get the downside gap fill. I would much prefer we get the downside gap fill. Mag 7's coming down a little bit. Look at that puke. Puke, puke. Testing. 30-minute testing. Puke, puke. 30-minute actually broke down. It actually broke down. Whoa. I almost shorted that, and I got lucky I didn't. That would have been a legit signal for me. Bro, your live stream is rated R and review video is rated G. Love it, man. Always turn a vid on to cuss fools out. Stay blessed, man. Ha, ha, ha. Shout out Robert Nixon. It's always good when a president comes in to say hi to us. Always good. Hang on, I'm trying to do some... I want to take my risk off the table now. Fuck it. Either we're hitting it or we're not, but no risk. Once again, it's all a game of risk management. Why did I feel comfortable doing this? Because we still haven't hit the downside gap fill, and I figure if there's a flush, I should be able to get it relatively simply. Boom. Just like that. Patience pays. 1.2K, 1.3K, all the accounts looking freaking good. Obviously, the bot hasn't been firing because I have it on long, and as soon as you start to break down, it's just turned off right now. So that's why the bot hasn't been firing. It's just because obviously the downfall. However, if we start to bounce, it's going to then start going long again, just so everyone knows. But obviously, I just took it, and that's it. Patient, patient, patient. I had a trade where I could have made 1,000, knocked me out for gain at 200. Had another trade, could have made 1,000, knocked me out for 200. And then on that time, I thought to myself, how many times I've seen 1,000 today and just didn't take it. Quickly locked it in at that key level of 900, just in case there's a bounce right there. Didn't want to deal with it. I got in on this push, this breakdown. You saw that I moved my stop to break even very quickly, targeted the key level, didn't want to deal with this bounce right here. Maybe a vomits. I don't know. All I can tell you is I know I made 1.3K on the day, and I don't need to overstay my welcome. That's a good game. I'm done. Easy peasy lemon squeezies, folks. Easy, literally just that. I am now done. Matt made 2.5K today off SPX calls and short position on top of that today. Thank you for your calls. Dude, it's all you, man. I'm so stoked that some of you are finally getting it. And eventually, I'm not giving up. These people who don't get basic math, we're going to convert them. I'm not quitting on them, We're not just going to cut them off and say, hey, you're too dumb. I will fucking stay here and preach it and beat it into their fucking feeble minds until one day they finally fucking get it. We're not quitting on them. We're years into it, and it's most likely going to take years more because there's always new people. And worse than that, there's always new scumbag trading gurus and furus and all that fucking shit. But we're going to be here as long as we need to. We're going to convert it. We're gonna convert it. We're going to convert them. We're gonna get them to one day see the light, the errors of their way. But anyway, folks, that's it for me right now. Before I let you go, couple major things. Watch for the bounce off of the downside gap fill. You do not want it to bounce right now. That is brutally bad for the bulls because on any recovery, it makes it really questionable of, should they actually be buying because we still don't have the downside gap fill. So you want to see 6689.75. You want to see that price hit. I'm not saying 7.6. I'm not saying this is horseshoes and hand grenades when you can round up. You want it to legitimately hit that level at minimum, and a slight overshoot is obviously acceptable, but you want it to fill the gap. Then from there, that's step one. Step 2 would be the recovery in the hold to 700. From there, it puts in a higher low, takes out 15, 30, pushes back to 50. That is beautiful for the bulls because then that means we are live and well to play the upside gap fill at 6829. However, if see right here, it didn't hit it. It got close. If we bounce from here, that is a huge fucking problem. We got as low as 6690.12 and we've already now bounced 10 points. Fuck. Like, that's the gap. There's still a gap in the chart. It makes it a pain in the ass to the point that I wouldn't play it. So you'd want the gap fill, step 1. Step 2, the recovery in the hold is 700. Great. From there, you take out 15, 30, and ideally end the day at 50 or higher, and you go. If we end the day above 700, I still count that as a win for the bulls. On the bear case, if we die and don't hold the transition zone and close at like the low or the closing from yesterday, 6,650, that's not good. I care a lot about getting the downside gap fill, and I care a lot about closing above or below 6,700. And then that is going to be a big indication to me of which way is the next overall move. So be prepared for that. I am after this. Well, what the fuck? After this downside gap fill, the party is not over. We could easily have a big dump or a big jump. The point here is get in with minimal risk, see if you can ride the trend. That's where you make your money. That's how you do it. Watch this downside gap fill. Obviously, simultaneously on the downside gap fill, you would want this vomiting to stop. Specifically, you would want all these 0 DTE put buyers to collect their profits. Right here, that's this light blue line, down and down and down. Those are 0 DTE put buying positions. You want them to get closed out, and ideally, you'd want people to start buying calls. You'd want the green line to go up. So right now, they're both going in the bearish direction. You'd obviously want them to flip and go in the bullish direction. Very, very important. Also, don't forget, right now, Apex, 4 days left. This is the best deal they've ever done. Use that code Goonie. Those are accounts I'm trading on that you saw I made the 1.2K. And then obviously, Funded Futures Network, traded on those as well. Use that code Goonie. Basically, code Goonie is going to get you the best deal on any of the major prop firms. So check them out. They both have awesome deals pinned to the top of chat in the description of the video. That's what I have for you guys for now. We'll be posting an update video later on today, more for like swing commentary. And in the meantime, I'm going to go hang out in the Goonie Trading Discord. Folks, that's what I have for you today. Stick to your trading plan. Respect your risk. Respecting your risk with proper size is the best thing you could possibly do. That's how you survive this game. Assume you're going to be right, wrong 50% of the time. So for you to be net profitable when you're right or wrong 50% of the time, it is keeping your risk minimal. And when you finally catch that fish, let it ride, let it ride, let it ride. That's what you need to do. I appreciate all the good vibes. Update video coming out tonight, and then we're streaming once again tomorrow morning, 9 a.m. bright and early for Payday Friday. Peace.